All right, so we're starting. So this is the first episode in perhaps many episodes where we're calling it "You Will Lose Everything." That's the
Every single video, you'll lose everything.
You Will Lose Everything. Updated for the time period. Right now, it's "You Will Lose Everything" 2023.
Oh yeah.
So
I will tell you when to buy, when to sell, and after it already happened.
after it already happened. All right, so I guess the first thing that we should be talking about, I guess, is the Degenerate stock picks and how that shaped YouTube.
It's gonna continue shaping YouTube. It's gonna continue to be worse because again, it's just gonna keep reflecting what people want to look at the end of the day. So
Yeah, I'm curious to hear your thoughts. So what do you feel? How do you feel about the state of YouTube finance? And because you've kind of you've started YouTube more recently. Like you're not
oh
been
yeah,
on here since 2020 or
I,
even before that.
5 months, 6 months, like consistently. Yeah, that's pretty
That's
much
what I'm
it.
saying. Oh
Yeah.
yeah, isn't that crazy? So it's like, how have you seen YouTube evolve over that time period?
It's been interesting. Now, I will say this. We all have experience with Motley Fool, Seeking Alpha, right? And we all know how degenerate they can be. The whole community of degenerate stock picks has been around for a century, like, right? And before Reddit, before online internet, newspapers and the dot-com bubble before that, degenerate stock picking was always a thing, always. So YouTube is no different. All you're doing is transitioning the retail investors from like the olden days onto the internet and the online.
Things are happening faster.
Oh yeah, it's a lot. Oh yeah. Now you got pump and dumps a lot efficiently.
So like this whole like I guess we can start talking about I mean, it's finally ended, but like the tattooed chef, can you believe that at one point was one of the YouTube's most popular stocks and everyone was making content on it?
Every single channel, like even the ones that 100K, 120K, whatever, every single one at least mentioned it once, right? You got guys like me, Kevin, with like, I mean, now he has 1.7. I think back then it was only a million, right? But everyone gave, yeah, only a million. But so much exposure went to this stock. A lot of these small caps in general. So now everybody has a mentality that small cap stocks are all garbage. Doesn't matter. Okay. 1 billion, 2 billion, 3 billion. Nope. Since YouTube, like these guys said it was like these guys said they were buying, they're now like down 90%. All of them are garbage. But no.
Yes, I was gonna ask you, and how do you feel about that?
Oh, frustrated. I mean, frustrated, but also it's like it's not my problem at the end of the day, right? At the end of the day, if these guys want to, say all small cap stocks are garbage, that's perfectly fine by me because you're trying to go against the crowd anyways, right? So less people that look at the good quality small caps, I am perfectly a-okay with that. So yeah, I'm like the only one looking at a funeral stock. So
yeah,
right?
I know. What do you call your portfolio again?
The Grim Reaper Index.
The Grim Reaper Index.
Yeah, guaranteed cash flows, guaranteed 10Ds, man.
But yeah, that was like the crazy part because like YouTube, people go on YouTube to try to supplement their research or to help out their research, and it seems like they care more. We were talking about this. They care way more about the editing quality than the actual information. And so, whose fault is it at the end of the day?
I would, yeah. At the end of the day, it's the viewers that are at fault with all this. You can, but the thing is though, this goes like outside of investing. It seems like it's just a cultural thing now where like everyone wants to play the victim. Nobody wants to take accountability for anything. They want to always resort it to like blaming the other side or whatever. But yeah, back to investing. That's it. At the end of the day, your money, take it seriously. Stop gambling. That's pretty much the TLDR, the way I go about it. But if I mess up on a stock, I'm gonna call myself dumb on that position or whatever. Like I'm gonna make sure, okay, what did I do wrong? How am I gonna improve on it and move on to the next stock or whatever? I've had my fair share of mistakes. My first 2 years of investing, I blew up my account twice, and then I humbled myself, tax sheltered account, index funds, and then with my personal account, I have individual stocks. That's the name of the game. But if you have an ego, like we know certain channels have, and they'll never say anything,
unnamed channels.
Yeah, unknown channels. They have these certain egos, and they're like, "Oh yeah, I'm a genius. I know everything. I'm like whatever," and they'll always continue to make these same mistakes over and over again. It's just insane.
Is there stature about 5'4"?
A goblin? Yes, indeed. Oh my God.
Do they wear glasses by chance?
Oh yeah. Wears glasses like me, but a little lighter in the shade. I gotta be careful with that stuff because you too with the PG stuff. I gotta be careful with that. But yeah.
So what are the things? Okay, so what are the things that you kind of look for in a stock in particular? Like, okay, what kind of size? Is there a sweet spot that you kind of aim for?
So I'll be honest, and honestly, this is a part of me where I will evolve over time. But like, if they're so massive, I just don't even like. For example, there's this one company called Couche-Tard, right, in Canada. It's a great company, has done well, but it's so massive now. So the way I look at it is this going to continue to beat the index? If the answer is no, I avoid it. Because I look at certain growth projections, certain margins, if they can do decent acquisitions, that will actually move the needle even a tiny bit. And if they don't, it's not going to translate to the returns. And so I have to kind of avoid it. And the way to go that. But yeah, certain market caps I look at, if it's like below 10 billion, I'm very interested. 1 to 10 billion is usually my sweet spot in terms of market caps to look at. And with Canada too, and I look at more so the Canadian market. So keep in mind, a 1 billion market cap company in Canada is very different to one in America. Again, Canada's a very tiny country. Its population is less than California. So you got to kind of account to that as well, right? So, but yeah, smaller companies I like to focus on because I'm in growth phase of my investing, not really preservation. But yeah.
I'm putting up this message because it's actually quite important for me.
Is cash?
Yeah.
With L3 Harris?
Oh boy, yes. Well, I don't know who it is. All right, so let's actually investigate this right now because this is news for me. And for those of you who don't know, well, depending on, I have the portfolio that's the holding company portfolio, which more than half of it is HRT, as you guys know, because you guys see it in the Discord. And then I have my personal holdings, right? That's, it's a more moderate, but in terms of dollar size, it's, it's going to be a decent payout. So we're going to see what the new reports are. And I'll share my screen after I find it, by the way. Don't worry, guys. I don't see where it says all cash. Oh, wait. Oh, yep. Boom. 5 hours ago.
So it's
5 hours ago. Done. $58 a share. We're out of it, boys. Oh yeah. So it looks like tomorrow I will probably be liquidating my HRD position. Not tomorrow, sorry. Tomorrow I might liquidate a portion of my HRD position on the jump, and then I will liquidate the remainder of it next year to kind of play around with the taxation of it, the realization of those gains. So yeah, that's why I do it.
We're at that month. We're at that month anyways. So
yeah, I know. Because if I sell it all now for the holding company is actually going to, pay a decent portion of tax. But if I sell some of it now, because it's all pretty much long-term now, sell some of it now, sell some of it next year, we are good to go. Yeah, so it's official, guys. And let me actually share my screen here. Let me prepare this.
So it's official. The regulators didn't say anything or anything. I actually no. Regulators, no. In this case, was the opposite. They actually wanted this company to get acquired, right?
Well, the Department of Defense made a statement a while ago. As long as it doesn't really harm the innovation, they're all for it. And something like L3 Harris doesn't really compete in this space. So here's the actual presentation. Or let me just go here, share screen. I'll share this screen over here, the third screen, so you can see it right here. Melbourne, this is announcement, only use necessary cookies, from L3 Harris themselves right here. L3 Harris, definitive agreement. So announced the signing of a definitive agreement with L3 Harris to acquire Aerojet Rocket 9 for $58 a share in an all cash This is exactly what I wanted. So in the call today from Discord, what did I say I wanted? I wanted an all cash transaction. Oh, I'm so happy. So woo.
Well, imagine you got shares of L3 Harris. You're gonna be like,
Well, I mean, like, I'd be okay with it, but then I'd be tied to like the movements of L3 Harris stock. So, my goodness, yeah, this is 5 hours ago. This is literally today. So we had the report from Reuters saying that, yeah, I know, Andrew, aren't you excited? Oh my goodness. So I have no idea what I'm going to do with the holding company's cash, because quite literally, it's like, it's a decent chunk of change. It's like, well, I think it's technically like 60 something percent, maybe over 50% in just AGRD. And yeah, I'm gonna have to find a new home for all that capital. Really, like, oh my goodness. So did they say when the it's gonna be? Surge of rocket down. Yeah, they don't really say. I guess the second acquisition, 20. Yeah, that's already there. But yeah, all right. Well, that's not really like to plan for, but it's really nice that it happened. So yeah, Dan. Yeah, you see that. But thank you, Andrew, for again. Yeah, we're merger oracles. No, absolutely. No, that was wonderful. Oh, Will P, I forgot. Yeah, you're invested in this company too. Yeah, so congratulations. Sorry for the celebration. It's all fresh news. So we're
no. I'm a L3 Harris shareholder, so like, whatever.
Oh, thank you, me. Good service.
Yeah.
Thank you for paying me.
Oh man. No, I love L3 Harris. Fantastic, exceptional business. I think they're going to do great. So.
Yeah, of the military defense contractors, is actually my favorite, but for various reasons. But
yeah.
I know a lot of people work there, and they're pretty cool. That's the only reason. I also follow people in grocery stores and make sure they work for L3 Harris, and if they do, I note it down as like it's more bullish.
They got a rocket in their pockets. All right. This is.
All right, we'll celebrate. We'll celebrate in the Discord community soon, because that is something for celebration. Definitely celebrate tomorrow, because it's 100% going to just jump up a little bit. I mean, what? It's like $55. It's like a $3 jump. We've already kind of experienced the gains thus far, but it's good to have the number.
Is it gonna moon with your Baba shares?
We're gonna. Hey, you want to talk about Baba? Oh my gosh, let's talk about Baba. The YouTube obsession.
Oh my god, the YouTube obsession with Baba. So, I've always been a hater of China. No bias, because I'm Indian, right? No bias at all. But like, Andrew, am I Andrew Tate? So no, I'm just kidding. No, but like Baba, the whole obsession with that, with the value investors onto YouTube, and they're buying it at higher prices. Some of the channels, when they were buying like 200,
220, 180, 170.
Some channels, he sounds like he's from. Are we allowed to mention names of these channels?
Yeah, absolutely. It's all game. I'm a small channel. I'm not gonna.
Yeah. So like, Sven Carlin. All right. Sven Carlin, this guy is more bullish on. He says that Baba has less risk than Meta, and the stuff like and here's the thing. He's not the only one. A lot of value investors have that type of mentality where like, with China, there's like no risks. Who cares? You hear everything about China, and there's certain things that might happen. They're like, oh no, it's okay. Nothing's gonna happen with Baba. It's the complete opposite, man. Baba is just one of those. If Baba was a US company, great, but it's not. It's structured differently. It's a VIE structure and all that stuff, right? All that jargon that goes on with that mess. It has to deal with the Chinese government. Chinese government is all about control. They're trying to control their stuff. We always talk about here with the whole antitrust stuff, but like, it's all noise at the end of the day. Like, are we really going to see Alphabet split up? Probably not. But guys like Alibaba, they got that unhindered risk of like shutting down a whole industry with China. How long have you been like Degenerate stocks? What year you start? I started 2017. My first 2 years were absolute dumpster fire, but after that, I humbled myself, and it was all good from there.
That's how it happened. So I want you to also be kind of if anyone's going through that right now, if you had this, you can get out of this and you can still improve. But a lot of people who followed a lot of these, YouTubers, unfortunately, some of them are going to say, I don't even want to invest anymore. Like, not even index funds. They're going to say, I don't want to invest anymore. I don't want to touch stocks. Those are the ones who are the real unfortunate ones. But
you gotta just understand. You just gotta humble yourself. The first 2 years for me, again, I was like, what, 19, 20? So like, for me, it was more like, no. I know what I'm doing. I'm smarter than everyone.
You take on leverage? What is this? 1920s, like
No. What up, 1920?
oh
19, no. But like, blew up the account twice. But then after the third year, like the first time blew up the
you
account,
say it so casually. Like I blew up the account twice. It's whatever.
The first time I blew up the account, I was like, no, it is what it is. So I did it again. And then I'm like, huh, I'm doing something wrong here, I think. It's definitely not the market's fault. So then I read a bunch of books. I understand, okay, then I started realizing more about the RRSP and TFSA, which is the Canadian Tax Sheltered Accounts, understanding those a lot more. And that's when I'm like, okay, index funds for those two, because just autopilot them, reoccurring buys, I never even look at them. So that's really good. And then after that, I was like, okay, let me have a new personal account, and this one will be more higher quality businesses, and I make sure that most of them are profitable, higher allocation in that department. But again, majority of it's still index funds. So I have a decent mentality when it comes to with my investing. When you are just individual stock picking for your whole portfolio, it can get stressful at times, and I do agree with that sentiment. But like, again, guys like you, Fabio, I think you're all individual, right?
Except my HSA account.
Okay, yeah, but for the most part, like as long as you have that deeper knowledge, like Fabio, where you're like you're genuinely researching the whole company through and through, and you understand what you're dealing with and the certain risks and whatnot, then that's perfectly fine. But most people,
I don't know what you're talking about. I just look at Yahoo Finance and
yeah. Yahoo Finance.
What's the fair value?
Analyst, you look at the analyst price in 1 year, and you're like, all right.
Is it under that? Buy.
Right there. But if you just relax within that department. Again, at the end of the day, if you buy the index, you're crushing most people. You're crushing most hedge funds. That's something to be proud of. That's not something to just throw in the side. So I know that I am crushing everyone when I invest in the index. But with my personal accounts as well, I also now have that mentality that, okay, I'm going to be looking for high quality businesses, and I will not invest with you if I think you will underperform the markets. So stuff like that.
So in that context, I want to ask you a question.
What's up?
Okay. So what is your favorite index fund or ETF?
S&P 500. Yeah.
S&P 500?
Yeah. But like, if I would say second favorite that's emerging to become the favorite, it is SCHD. That one's
SCHD.
Yeah.
Right. We'll come back to Baba maybe, but if there's anything else to be said, we kind of all agree on Baba, but we're just preaching to the choir at this point. So yeah, here we go. SCHD. Why do you like this one so much? Explain it to the audience a little bit.
It's a dividend growth. It's a dividend growth beast. We can look at the holdings if you want, and the way they track the dividend growth is good. And what I like about it is that it's not big tech heavy, and it still outperformed the regular S&P 500. While S&P 500, some would argue they were kind of carried by the big tech the last decade, right? So I love SCHD. I think they do exceptionally well with the way they look for high quality dividend companies, and the way they look for those, because a 7 to 13% dividend growth per year. If you aren't buying calls and triple, oh man.
Oh, yeah, we can talk about that guy. That guy is an interesting case, but yeah, continue with SHD.
And the expense ratio very low, 0.06, right? The S&P 500 one, it's 0.03. Some of them can be lower than that. And then you got VT, absolute hot garbage. That thing's at 0.07.
He's not even. He's throwing shots.
Absolute garbage ETF. And if you buy that, you're as smart as Paul Gabriel. So I don't know, man. It is what it is in that department. I don't know why anyone with the right mind would buy VT. So,
Kingdom's a huge fan of VT.
Yeah, absolutely. Because here's the thing, the whole thing with VT is but emerging markets. Yeah, emerging markets. Let's see how their currencies are doing right now. They're all imploding to the grounds. But bro, it's gonna get better. No, it's not. Stop. There's certain countries, absolutely, that'll do exceptionally well. But if they do not have the financial infrastructure to sustain any sort of growth that they have, because again, people look at the population, like, population, look at this. Oh man, but there's no financial infrastructure. If there's not good regulations, if you're not the reserve currency, oh wow, reserve currency, that's kind of important. You got a lot of limitations. The United States of America has a lot of unfair advantages, and people water that stuff down. They say it doesn't matter. They're like, oh no, who cares? And they always keep forgetting that these U.S. businesses, they're international businesses now. They're not even like just purely U.S. Like, do you want to look at the portfolio of Starbucks and how international that company is, or Nike?
We were just talking about in today's call. By the way, for everyone, you better like this live stream. I've been streaming for about, we're going to get to 8 hours of me streaming today. So, but anyways, in the call today, we kind of addressed how there can still be an earnings hit for the United States companies, the S&P, broadly speaking, because of the international exposure, because of how much business they make from the globe. So, yeah, I agree with you there.
Yeah. So, like, and the thing with VT2, it's like, if you want that emerging market exposure, there's a different way to go about it. So you invest in the S&P 500 or SCHD, which is a exceptional index ETF. That's a great one. Another way to go about just specific countries that you believe are going to do exceptionally well. So for me personally, I'm only bullish in the United States and India. That's it. Southeast Asia might be a decent option as well. But again, those are the only two I really care about. The rest, I couldn't care less. Europe, that thing's a joke. New Zealand, what is that? Sri Lanka, they're already gone. They don't even exist. Like, their whole currency's gone. It's poof, it's gone. Turkey, forget it. Their inflation's crazy as well. Like, mention any emerging country, like emerging markets, like they've all have imploded to the ground. So S&P 500, an Indian index fund, like for Canadians, if any Canadians are watching this, the one I buy is ZID.TO. It's a BMO Indian index. That one has done exceptionally well as well. It's actually outperforming the markets this year as well. So I'm pretty sure it's in the positive. So that thing's really good. And in the positive Canadian currency. So the Americans actually might be better, might be worse. I don't know. Probably worse. It'll probably be like.
Yeah, because of our comparison in terms of dollars to the Indian currency. Yeah.
No, Canadian currency. But yeah.
Oh, okay.
Yeah, because the Indian index that I buy, it is in Canadian currency because it's by the Bank of Montreal. They have that ETF.
Oh, no. I thought you were referring to the American version of an Indian index within the United States. Yeah, for us, it's probably if the dollar has performed better to the Indian currency, then our performance in dollars might have been a little bit worse. But you guys are kind of pegged to us, though. So, like, we kind of move together, don't we? The Canadian dollar and the US dollar.
Yeah. It's pretty pegged. We're very dependent on the American economy, which a lot of countries are. Like, a lot of countries are dependent on the States. A lot of countries also dependent on China as well. China, man. Oh, look at this one guy. He's saying, let's talk about Zim. Why do you want to talk about Zim? Absolute trash.
All right, so let's talk about Zim. So
Zim,
Zim as a shipping business, I believe that we have some people in the community that are really, really knowledgeable about ships. You know who I'm talking about.
Oh yeah.
No name. But they're very knowledgeable about this stuff. And so some of the things that we learned from them was, for example, some of the nuances about Zim is that I don't think they own most of their fleet, right? And so as far as like that dividend yield is extremely suspect. Okay.
Oh yeah, 171%. Oh yeah.
Oh, we have some names from the community coming in here. So, oh my gosh, does this guy? Wait, where's my mouse? Oh, that's over there. I'm seeing double vision there. Are we gonna? I know they're definitely joking about Zim. That's talking. He was spamming.
Okay. All right, I was about to say I was gonna rip on that comment there. I'm like, God damn. Wait, are you even allowed to talk about this on your?
No. Okay. You know what? Because now you can't follow me on it. You can't get my price.
No,
I'll talk about it on YouTube. Should we talk about it?
The macro stuff. I would think, for the betterment of the audience, even though they're gonna hate it, I don't think it's a good idea. I don't know. Again, that's just my opinion. But I think the macro stuff. Again, most people should avoid stuff like this.
Yeah, that's why I avoid talking about it on YouTube.
Yeah, exactly.
That's precisely why.
I think you should just keep it on the Discord. Like, I don't know. It's up to you.
I'll be fair. Okay, so this is the one time that you're probably going to hear me say it this way. I may or may not have a position where I have exposure to a certain kind of trade that may or may not involve products like TLT and other products to it. But the thing is, I've been involved in it since about beginning of November, mid-November. And so the prices I may or may not have. I'm just joking with you. Yes, I already have a position built out in some of these products, but YouTube, I always refrain from talking about it because it's a bit more on the it's a bit more tricky. And same thing with when I was involved with a product called TTT. I mentioned it on the Discord. I did mention it on YouTube occasionally, but TTT wasn't very comfortable with discussing in depth on YouTube, just simply because it's a product that, as a retail investor, you shouldn't really be getting too involved with. You can just as easily cause harm to your account, not just good. So vice versa on the other end, when I'm kind of making some macro trades, I kind of keep those a little bit more close guarded. And as far as like it goes with the rules I've established for the YouTube portfolio, the stocks it shows is publicly traded stocks of publicly traded equities of the larger scale. And if I ever involve myself, Kingdom knows, with nano caps, you will only see them portrayed as a category, nano caps, without actually the tickers being displayed because of the size and, the just maintaining responsibility on YouTube. I would never be a 700,000 subscriber channel talking about a 50 million market cap stock. Are you freaking kidding me?
bro, even when we were talking about the nano caps the other day, like, even we get a little uncomfortable talking about it, right? On the Discord. Because it's like, and this man, 700,000 on the peak. By the way, this isn't like 2022 where his views are, collapsing. Way back in 2021 at the peak where he was getting, I'm pretty sure 100K views, 50 mil market cap. Where there's no, by the way, with companies below 100 million market cap, there is no liquidity. You are the hedge fund for these
I can move them very easily.
Yeah. Anyone can move a nano cap. I moved a nano cap the other day. But again, those ones I keep it private. I never mention the nano caps ever. Besides the Discord, but that's just for jokes. I really.
Yeah. And even then, because I feel like the community really has a good head on their shoulders. They're very calm about it, and they'll analyze it for themselves. And it's very important to address the risk, by the way. The reason why everyone should just completely avoid them is you need to understand that when you put your money in those things, there are solid companies out there. It's much harder to find them. There's a lot more work that gets involved to actually find the companies. But just like a private company, this is actually one of the topics of today's call. That was 2 hours. Well, there was a 3-hour call, then there was a 2-hour call. But in both calls, I addressed this and kind of getting into it. It's like buying a private company. The volume is just not there. It's not. You can't just sell out your position tomorrow. Even a $500 million company, you could sell out pretty quickly. But really, some companies out there, they're probably much only family owned. And all the shares are owned by the family. And so if you have a 5-figure position in it, it's it's not, you're going to take months, maybe. To sell. So
yeah, there's a massive liquidity problem. So earlier you're talking about a small cap funeral company. Were you talking about? Yes, PLC. Yeah, Park Lawn Corporation, exceptional.
This man loves Park Lawn.
I love Park Lawn. It's just my babe.
Let's pull it up.
Yeah,
so you got to brag about this because this is your baby.
Yeah. This is one of my more larger holdings in the portfolio. This is great. Absolutely exceptional business. The growth has slowed down, if not actually declining with the recent quarter. Again, I think value compression is also a big factor with it as well, and acquisition as well. So some short-term headwinds. 2023, honestly, there could be some headwinds as well. Could be some margin compression with casket prices dropping a bit. So I think I'm going to get even a better opportunity for 2023 with this one. But yeah, Park Lawn, fantastic. Some guys were spamming CSV, which is the trash version of Park Lawn. It's the carriage services. They're the more leveraged ones in the whole funeral space. For the Americans watching it, look at, you like carriage? For For the American ones, I would say Service Corporation, exceptional. That's a dividend growth beast in the U.S. space. SCI or whatever is the ticker symbol or something.
Oh, SCI, yeah.
Yeah, I'm pretty sure that's the ticker
Here
symbol.
we'll bring out the sponsor that not really a sponsor, but joke sponsor, and then we'll start looking at them on here. So I relinquish all responsibilities.
Oh man, but yeah,
I lost you. Here you are. I gotta exit all these tabs, man. There's too many tabs. There's too many tabs from the call. I always have like infinite tabs after those calls.
Yeah, but JM, I'm not a big fan of CSV, but I like the mentality. Like, yeah, the funeral industry, it's a great industry to be investing in for the long term. These are cash cows. I do speculate that in the future, you're going to see massive valuation expansions as you're seeing more funeral and cemetery homes get more and more consolidated and get acquired. Majority of them are still privately held. So as they get acquired and getting more and more accumulation. And again, you can't just open a funeral home, like whatever, for out of thin air and cemetery. There's a lot of regulations in place. So it can't be just some brick and mortar store that you open up.
Hey, what is all this? What's all this about?
Yeah, they got a decent amount of debt. Yeah. Oh wait, is this for Parklawn?
This is Parklawn. I'm just messing.
Yeah.
What is all this about? They're not.
Whoa. Look at Carriage.
Let's go to CSV. Let's go to CSV.
Yeah. So CSV, that's the one where the debt's a little bit more unsustainable. Carriage will be fine. When I compare it with Service Corporation and Parklawn, just don't think this is the one. Like, look at this. It's ugh.
So well, they've had like leverage throughout the entire time. They're basically like a double in their long-term debt, or like what? 10
yeah,
years?
Exactly. They're double more of that Parklawn. So
oh my gosh, what the hell though over here?
Yeah. It's a mess.
In comparison. Yeah. No, in comparison, like I mean they got a lot more cash.
Yeah.
Relative to the debt.
So it's like I mean, let's look at Service Corporation. That one does have a decent amount of debt themselves, but I do think Service Corporation, they do an exceptionally well job executing the business. Now, an interesting thing with all three of these companies. Oh, look at this. CSV is a high risk of cutting its dividend. Yeah. Well, I wonder why. Why.
Did I say that? Oh, here, yeah. All right, whatever. I don't know. Teach me. Teach me. Tell me why. F
grade. Look at the debt levels.
No. Yeah, what are they taking up on total debt to capital? Oh, basically they're exactly what you're saying. They're just basically saying it's over leveraged.
Yeah.
You already found that out without this tool.
Yeah, exactly. So but the tool helps you, bro. I mean, actually, no, it's not bad. No, it's not bad. It's not bad. It's actually pretty good. Seeking Alpha has done a better job, preventing people buying garbage stocks than most finance channels. So
Oh, that's a rip because that's
yeah. So
no, they've been destroyed. So whoever's buying CSV, JM, so yeah, their leverage position cycles up and down, but their business rates on the debt are good. Okay, so like it could be cheaper debt.
So let's say if they got the debt in 2020, then maybe it's not as bad. I know Service Corporation, Parkland, they got a decent amount of debt in 2020. Like literally no rates, like there was no interest rate on those, so it was like pretty much free money for them.
So the markets actually, I mean, a drop of 55% is way more than their competitor over here.
Yeah,
is this Canadian, right? Is
Canadian. No. This is the American.
This is American. Okay, so then SCI is the other American one.
SCI is an exceptional company. They have outperformed Parkland and CSV because it is the best company in this space, period. It is the
honestly
leader. Yeah.
If you're going for just go for the quality one, why not?
Parkland.
No, Parkland in the Canada, but like I'm saying, if you're
you're talking to him. Oh, you're talking to JM. Yeah. So for JM, why not stick with Service Corporation? I think this is again, if you're an American, Service Corporation is exceptional. They are a dividend growth driver as well. And the interesting thing with all these three companies, they all have different margins, gross margins, because they all operate their businesses a bit differently. Parkland has the highest gross margins. Carriage is second, and then Service is like 20%. I'm pretty sure, something like that. But yeah, Service Corporation. it is the best in this space. They are the leaders. Exceptionally well run. Yeah, they do have a decent amount of debt though, but when you look at the sheer size of the company as well, it's fine. Yeah,
it's fine.
Yeah, if it was like $4 billion on Carriage, then it's like, oh, all right. What was the market cap of Carriage again? I'm pretty sure
it's like 400 million.
Oh, is it like that small? Hold up, I didn't even know it was that small.
Yeah, it's 400 million right here.
400 million, and how much did debt they have? Like 500
million. Park Lawns 800. And let's go back to Carriage. So
Carriage 400 million.
It's easier.
Yeah. What was it? Debt
500.
Oh, they have more debt than they do their market. That's crazy. Board seat. Hey, yo, I low-key will with that. But I won't talk about those on here. Thoughts on Canadian banks at the moment? So, Fabio, you got some decent take on this because you got your the whole housing market with Canada. But personally, for me, I avoid the big, large Canadian companies.
I agree with
Canadian
you,
banks. No, I know, but you got a better way of explaining it than me. I got a more simplistic way of talking about it. But for me personally, I avoid the big banks. I think they're all fine, but like investing in it, I'm just not comfortable with the variable interest rates and all that stuff. So I prefer the smaller ones like EQB. EQB is barely a bank. They call themselves a bank, financial services. I don't want to put it in the same category as bank, but it is. It is a bank, but they do different stuff. We can go into EQB if you want.
No, I already pulled up EQB. I read your mind. I knew you were going to mention it. This is the one we've spoken about. And
yeah, EQB, out of all the Canadian banks, and again, I'm going to put air quotations on Canadian banks, EQB is a bank, but like, not really. At least the services that they provide. Royal Bank, what's so royal about Royal Bank of Canada? Well, Royal Bank is like, I don't know, what would you say, JP Morgan of Canada, something like that?
I wouldn't insult JP Morgan like that. I'm kidding. I'm kidding. Royal Bank of Canada, what's the ticker symbol? I'll just type it in.
Yeah, just type in Royal, come out.
RY. That was easy. Okay, Royal Bank of Canada. I mean, I know that the Bank of Montreal, the Royal Bank of Canada, they're all pretty much like high yielders. That's why the Canadians really love them. Every Canadian I speak to, they love the banks for their dividends.
I don't. I'm like the complete. Okay, the weird thing is, I think I'm the only Canadian in this investing space where I avoid the whole Canadian industry. Like I avoid utilities, I avoid telecommunication stocks, I avoid the big bank stocks. What else you got? Oil and gas stocks. I avoid that. So I basically avoided, and the mining companies. I essentially avoided the whole Canadian market because again, I focused the more smaller companies, higher margins, higher growth rates, stuff like that. But yeah, and these big banks, they don't like. Again, you're putting a lot of research in these big banks. Are not easy to understand. These are very. That's why I like EQB. EQB is a lot more easier for me to personally understand than any of these traditional banks. That's why I always cringe a bit with the that's why I always like I don't like to call EQB a bank.
But someone's asking, Dead Money is asking, a member of our lovely community is asking, can you go into the thesis for EQB a bit more?
Yeah.
What makes you like it?
I like the growth levels. I like the margins. I like the way they operate their business. I like the fact that they don't have the same unnecessary risks that the other legacy banks do. They don't have that. They don't have all those garbage assets that they deal with. It's all more isolated to the niche that they built upon. And again, it's more so the younger generations that tend to use EQB as well. Their fees are a lot better. I use the Lufufu experiment as well. Like I used it myself, and it's okay. It's good. Can you please mention Intel? I mean, we can talk about Intel. I'll rip on it.
Oh, 100%.
It is one of your larger holdings. We could talk about we could talk about Intel. Let's just talk about some of the Canadian stuff as well. But yeah, EQB in general, I love it. I think it's going to do just fine. Again, I love the fact that it has outperformed all the major banks. The U.S. banks, the Canadian banks, outperformed all of them. But that's also because it's not really a bank. But again, whatever. We still compare it to the traditional banks. But I avoid it. I try to avoid it if I can. Because again, would you compare EQB to a traditional bank? No,
No.
right? No, because it's not really like that. And then some guy asked for biotech. I avoid all that stuff. That's all. Like, again, if you work in the healthcare space, have at it. You probably know some stuff.
Well, big pharma show. He always jokes around. He's using his degree to good use, and yeah, we all know who Big Pharma show. You know who Big Pharma show is.
Is that Jay Garner? Or?
Well, we don't name drop members.
Oh, yeah.
We don't name drop members of the club.
Oh yeah.
I'm just kidding. No, but he goes by a very similar name.
Oh, okay, I won't name drop again. Okay.
No. Some members are private, but some members are not.
No. I'll keep it zip now. But the other one, the other one, I'll keep it quiet now. But like, because he's allegedly. No, I'm just kidding. Okay. But let's go to the other one. The guy, like, that is the best ticker symbol, ZZZ. So this is what Paul Gabriel wished he'd invested in. This is basically sleep number if they're actually run properly and not leveraged, and they actually like have a couple brain cells. It has underperformed quite a bit, but it is an exceptionally well-run business. It's a decent dividend growth driver as well. So I like the company.
Are you accumulating shares here at these levels?
Yep. I like the company. It is definitely a lower allocation because the products they sell, they're a little bit more on the premier end with the mattresses and stuff. So I'm a little bit fearful for 2023 as you're seeing spending rates dropping substantially. And I think the market is realizing that. So that's why you're seeing that massive compression. But again, it hasn't really shown up in the numbers yet, which is weird because you're seeing a lot of discretionary spending companies where that's already been shown, like PayPal and Align Technology and all that stuff, right?
Oh, Align Technology. That's one we have a bit of interest in, but we'll talk about that maybe. So Sleep Country, they're the store, right? They're not a brand, are they? They're just a store company, like
and e-commerce, but yeah.
Okay, so I go there and I buy the brand of the beds,
mattresses.
Mattresses.
Yeah.
Okay, so this is where I go. Mattresses, pillows, beddings, furniture.
Yeah, curtains. Yeah, they acquired a curtain company as well.
Yeah, someone's mentioning 800 million market cap, generating $150 million.
This is you want a deep value play. This is a deep value play. You want a company that's paying like a ridiculous dividend yield, but they're paying like pennies on the dollar. It's this company. Like the dividends they're paying is like 10 million. And yet they're still dishing out like 4%. No, like this is a deep value play. I love the company. I think they're fantastic. I think they run really well. I think the management team's great. Balance sheet's really good as well.
Whoa, what?
Whoa! Look at that.
Yeah, they run a pretty well. Hopefully this is aggregating correctly, but like they run a pretty tight ship. Looks like. Yeah. And let me come down here. What's the price right now?
For what?
For the stock?
30 something, I think.
Oh, okay, no, it's nowhere close to the book value.
Okay.
Well, let me actually see how that's traded historically.
Yeah.
Just out of curiosity, I'm just curious.
Okay.
And let me change this to linear. Okay, no, let me zoom out a little bit further. Hopefully it loads in. There we go.
Just do max. Yeah, max would be more appropriate.
No, it hasn't.
Yeah.
Okay, so basically 2020 was that really low point, but historically speaking, it's actually below where it usually trades at. Which is
it a Jay Nagy stock? Is it a
book
value?
No, because there is added context, right, that we're missing. So it could be that the market's kind of pricing in that slowdown next year, which you already are, talking about. So let me see if there's a metric here I can use for that. Usually, like we can do like a measure of like forward earnings P, but like I don't think they have that because it's not very used. It's only like for this specific situation that I would want to use it. Well, let's see. Like I'm just gonna see what this is saying. So like the forward P is 8.
So I do believe that when the compression's happening, the more
Trailing.
realistic valuation will probably be about 15, 16 when you see that compressed margins for next year. But
Yeah.
it hasn't. The weird thing is, it just hasn't shown yet. A lot of these other discretionary spending companies, they've all shown it like right now. So very interesting that this high quality mattress company hasn't really shown that yet. You know, and the one thing I like to look at as well. Shake my head, cough. What did I do? What did I do, Ricky?
No, I think maybe that's a ticker. I don't know. Rick's a funny guy. Ricky's one of the Ricky
Oh, I
and
love
JC brought in Rick's. All right, Rick.
Yeah,
RCI
the
Hospitality.
Rick stonk. Yeah. But
Oh boy.
but yeah, TLDR on the Sleep Country, great company. Could be potentially in a deep value play right now. It is a meme at this point saying deep value because like
because of certain YouTuber that
certain value trap investors. Yeah. But this company, 10 times, like a billion times better than Sleep Number. Sleep Number, they're so cloud. Let's take on debt to buy back shares. That's a great idea.
Take on debt on the revolving line of credit.
Yeah. Oh, that's even worse. Oh man, and because again, their software didn't even they didn't see that. They didn't see that at all. There was like they didn't even see the current ratio or anything.
Well, remember he spoke to his friend. He spoke to his friend. His friend told him it's not a value play, or no, sorry. He says it was a value play, but his friend told him some things that made him sell.
Which is so goofy. That's not how you do investing. You don't ask other people. Like,
well, no. It's just for that. It was so basic. It was so like surface level, like the reason to avoid.
Yeah, you just look at some basic. And again, these guys are supposed to be looking at the quantitative side. That's supposed to be their thing. They're garbage at it.
Yeah. They were already like piss poor at like the
qualitative side.
Yeah, the qualitative side of investing. They're piss poor at it. So all they had going for them, if anything, was the qualitative side. The quantitative side.
And the quantitative side, they're hot garbage as well. Oh, Paul Gabriel, you are.
Oh, he's name drop. I wonder who we're talking about.
Yeah.
So how have they been? Tattooed Chef, deep value. At this point.
Yeah, TTCF, bro. And here's the thing. I made a video on TTCF. I said like, here's an alternative, which is Simply Good Foods. That's a great company.
I don't know. We're not going to pay attention to that. We're going to the.
Oh yeah. We're looking at the garbage one. Yeah.
Jeez,
Simply
man.
Good Foods.
Jeez, man, this is so funny to watch. How much you want to bet? All right, I'm gonna go to it. Watch this. Watch this, boys. Ladies and gentlemen, we're gonna go back into the past. A blast in the past to
the strong buy. Like just like go all the way back to the strong.
Oh yeah, we're gonna go to like a strong buy here.
SL Investments. What is that? Some hedge fund?
So the acquisition of foods in New Mexico brought new markets and opportunities. The demand for Tattoo Chef products is extremely strong. Tattoo Chef will most likely be relatively safe from potential inflation risk. Completely wrong. I believe Tattoo Chef will see 300%. Again, it's easy to complain, but I think all of us made content saying basically how this was wrong when Tattoo Chef was high. Okay, before
Chef. You guys all did that. I didn't have a channel really, but yeah, you guys have done really well with those videos.
I'm trying to see that. Yeah, but they didn't get many views because no one wanted to hear the bad sides of Tattoo Chef. Everyone wanted to hear like Tattoo Chef's going to 10x. We had to play the type and get some, on that stuff. And that's how we actually got converts. We have converts in the community. All right. So we did save some people. We did. Okay. By the way, if you are those people, feel free to comment that, down in the comment section if you want. You don't have to say anything. But yeah, it was a couple of them. We saved a couple. Price of sales. Is this person trying to talk some sense? Or is this person degenerate long?
Let's see, a degenerate long, I think.
Oh, much too high. Oh no, he says much too high. Okay, so he's criticizing the evaluation. I just love sometimes the comments because sometimes you'd find people who just basically quote Jeremy in here.
Oh yeah, no, legit.
But they just quote Jeremy. Like, look at the skew expansion.
Yeah.
Like,
I saw a girl buy TTCF. Vegan movement.
No, look, some people are like, all right, it's too expensive. It's TTCH. What stock is that? I don't even know what stock that is.
I don't know.
Is a buy below
15 is a buy. It'll be
Okay, so
profitable.
it'll be profitable. Yeah, well, that was wrong. Never mind.
I,
Well, that was wrong. Never mind.
I wish there was a study that showed like how much money you would save just focusing on profitable companies.
Who caused this? Who caused this comment? Who caused this comment? Read that comment.
It's funny because Courser's not even that bad of a company. It's okay. But like,
why would someone randomly quote Tattooed Chef and Corsair in the same comment?
Yeah. Vegan foods, gaming, like hardware gaming.
Wonder who they watched and where they got it from.
Yeah,
I wonder. Oh, wow. Like, oh my God. All right. Anyways, enough of dunking on this. So Simply Good Foods. What's the ticker?
Yeah, Simply. Just type in Simply, bro. There we go. So that one, I gave that one as an alternative. Exceptional company. They got the Quest Bar brands, Quest Bar, all that stuff. They also got the Atkins brand. So the whole keto diet, decent subscription model there.
This is Kingdom of Finance. You can find them. Here, let me see it there. Kingdom of Finance. You can see it right there. You can subscribe to Kingdom of Finance.
There you go.
So Simply Good Foods. Simply Good Foods company. So what makes this business interesting? I think, well, profitable, right?
Whoa.
Okay, so then I think, yeah, I know some of their brands, right? We went over this company
Quest Bar,
before.
yeah, the Quest Bars, that brand. Let's look at their website. Look, they acquired another company, I think, but yeah.
Atkins and Quest.
Yeah, it's two strong brands.
Yeah, no, fantastic.
Yeah, and the I like that subscription-based model that they got going on with the whole keto diet stuff. That has been like high margins for them, so really good in that department. They have 50% gross margins, I'm pretty sure.
What?
Which something TTCF struggles.
Oh.
By 50 times.
Endless shots thrown. Let's go to the profitability. I mean, wow.
Oh, 38. I got that.
No, that's still high.
No, that's still really good. Yeah.
That's still high. So according to the website, that's above sector median.
I swear it was like 50. But yeah, whatever. That's still really high. That's the point. But yeah, this is a great, exceptional business. I just disagree with the valuations, or I would be buying it. But it is a smaller company. So hey, guess what? This is a smaller company. This is 3.75 billion. This is not some massive company. Spot. And this company, even IPO, guess what? They were still profitable. They were still free cash flow positive. Really good gross margins even back then. Whoa, crazy stuff, man. It's almost like you can always just stick to the profitable companies. And if you want to buy an unprofitable one, keep it as a speculation play.
Wrong. You're just wrong.
Just wrong.
You just have to accept that you're just wrong. Just calm down there, buddy. Yeah, all right, we got a Micron question in here. By the way, I completely forgive me if we skip over your questions by accident. But also, by the way, do you guys like the title of these episodes? These episodes, we're going to try to make them a more regular thing. We're just going to title it, You Will Lose Everything. that's well, we're going to talk about, stock, strategy change, stuff like that, more of in a casual space.
Oh, yeah.
It's just a hangout between me and Kingdom.
Oh, yeah.
Okay, so Micron. You're supposed to talk about Intel, but we'll get to Micron. We'll get to
Micron first. Micron, this is all you, because like again, the chip space, not my cup of tea. The only ones I really like in the chip space is ASML because of their lithographic machinery, which is a massive monopoly. The other previous lithographic machinery companies, they're all bankrupt. They're all gone. So ASML is the only player in that. But yeah, you can take the stage on this one.
I want to quickly address the title of these. So the point, actually, just so we're clear for the lore of these episodes, if we're going to keep the name, it's supposed to make fun of clickbait. Obviously, that's it's supposed to like completely be on the nose, making fun of clickbait. If you can't tell, like look at the thumbnail. There's like flames, and then it's like you will lose everything, but we're not giving like a dire warning or anything. Like
Michael Burry's randomly in there.
Yeah, he's randomly I put him randomly in the corner, just like it's supposed to poke fun at it because. I think Kingdom and I were both like kind of not nihilistic about YouTube, but fin YouTube, but like
yeah. I mean, my investment strategies is a great. It's a decent reflection of the negativity. Everything shall burn. But yeah, anyways, Micron.
All right, so Micron's a company that I made a video about, and actually it was up the subject of today's call. I think I've addressed it both times, but. Micron's a company that I am looking at as well, but I don't agree with where value investor or super investors were actually really positive on Micron. I think people truly forgot that Micron is a cyclical business, and we did truly enter an exuberant time of CapEx investing and a lot of data warehouse infrastructure, where a lot of memory was being bought up, and you basically had, you know, a Goldilocks period for this industry. So kind of going forward, where's the exaggerate? Oh, I gotta use one. Yeah, for the next thumbnail, I'll put one, and you got to do like some crazy hand thing, and then I'll keep the thing.
Get Cole to do it, and then Cole can just have a crazy thing. We can just throw that in the corner.
Just throw it in the corner.
Just use Cole's face. Just use Cole's face. Just
the one where he's like,
oh yeah.
Well, we got to get to SoFi too. We have to talk. We have to talk about like our counterpart, you know, part of YouTube, because we're like around the same-ish size, like Rue Rabble, us, and then that, you know, well, unnamed, but so Micron here is sitting at, you know, $52 a share. Typically, yes, Marcel, the call should actually be uploaded pretty soon. You should actually watch it for that part, for Salesforce. I go actually pretty deep into Salesforce.
Yeah. Fun fact, I was an original shareholder of Salesforce, and I sold it, and I actually broke even on it. So that's kind of nice.
Hey, yeah, there you go.
Yeah.
But Marcelo, as soon as it's available, take a look at it. You'll probably enjoy that part. So, okay, let's see the I have a video on Micron, basically Micron on a lot of Kingdom of Capital, a lot of these semiconductors, specifically kind of like Micron. You would have done very well in the past had you been buying around book value. So if you bought around book value, you would have done historically fairly well. And then if you sell at a I forget what the exact number of the premium to book value that historically has worked out for Micron. That doesn't mean that next time it will be the same way, by the way. Okay, that doesn't mean that. You have to actually always judge it on an individual basis. It's just kind of like a relative valuation tool that you can use to kind of gauge on where the market's at, and, you know, again, relative valuation comparison to its historical value. All right, so on book value is, I think, sitting at $45 per share. You can kind of also think about it in some ways as saying replacement value. What would it cost to build out a brand new Micron? Well, right now it's kind of closer to around $45 per share. So if I would see it at that price, I'd actually be quite interested. And if we could see a discount to book value, like that's when I'm like, yeah, that. But usually, I also talk about the accounting. So right now, the PE ratio looks really low. Look at the cash flows. Let's take a look at the cash flows. Let's take a look at this. Because these are the nuances a lot of YouTubers sometimes miss out. And I don't want to say that super investors also miss this out, but I'm not going to be that brash or harsh or arrogant, but maybe. All right, so let's.
I think what super investors, like, they really should take their own advice. Don't, if it's outside of your circle of competence, don't touch it. Again, they break their own rules. We're all human at the end of the day, right? But, you know, whatever.
So do you see that line, the line item all the way at the end, cash flows from operations minus capital expenditure? For this kind of business, actually, this is fairly, you know, good metric. So we're looking at the cash flows. Cash flow is sitting at what, 3 billion?
Yeah.
Look at the net income, 8.6 billion. Why? Because it all has to do with like the revenue recognition. So it depends on how it is that they're receiving the cash or recognizing the sale, right? There's going to be a difference. So what I suspect that's going to happen into the future is there's going to be an adjustment. There will be an adjustment, okay? Because right now the net income is not really reflecting the true cash moving in and out of the business. And that, again, has to do with when they're recognizing the sale, when they're recognizing the revenue. Because in accounting, we look at, or GAAP accounting, it's the accrual basis of accounting. So we recognize it after the fulfillment of said service, said sale has been done, then we recognize the revenue. But that doesn't mean it's matching exactly when we receive the cash. Okay, so what's probably going to happen in like a year or so from now is it's going to probably adjust, and you're going to see like a PE of maybe like 15-ish around there. So it looks really cheap now. It should adjust. And then at that point, it might actually end up looking expensive. And with Micron, with a cyclical, and that's when you buy. So you might see further distress in the stock price. And then if you do, you'd probably be looking for it. I don't know.
Yeah. I don't know. Yeah, chip companies are just so ugh. I mean, again, let me know when you're done, Mike, or we could just rip on. I mean, I'll bully you on the Intel one.
Okay, let's go with Intel. No, let's go right into Intel.
Right into Intel. Okay, so what allocation of the portfolio do you like? Top of your head that you can remember. What's the allocation of your Intel one?
Sorry. Andrew is so about the
I'm
HRD acquisition. Hey, we know we're gonna have to talk about it because it's gonna be like, what do we do now?
What are you doing? He's telling you.
No, because it's legitimate. But anyways, so
Yeah, Intel. All right.
Intel.
All right. So what is if you could think of top of your head, what's the allocation estimate for Intel for you?
It's about 5%, maybe a little bit less now.
All right. Well, rest in peace, because 5% of your portfolio, I'm gonna rip on it right now. So I think if you buy Intel directly is the most moronic move you can do right now. But hey, it is what it is. I think Intel investing in Intel indirectly, I think is the better option, because I think, again, as investors, what are we trying to make? Tendies, man. We're trying to make tendies over here. We're trying to make more money, right? So I think indirect investment with Intel will give you more will give shareholders more value than direct investment. So let me give you some examples. Brookfield Corporation.
Yeah.
When you buy, as you call it, the mothership, you get that exposure to the infrastructure side. You get the exposure to the renewable side, the asset management side, which they just spun out, and whatever. It is what it is with that.
Made it
one.
more complex, yeah.
Why? You just had to ruin my time with that one. Like, whatever. It took me like 3 hours to understand that one. But yeah, all that. So that one's good. And also you can invest in terms of like customer base. So ASML, what are their largest customers? Intel, Taiwan Semiconductor, and Samsung. And what do they buy from ASML? The lithographic machines. And the newest gen of the lithographic machines, guess who's going to have hands on that? Intel. So, and guess who, like, where those margins are going to come from, and the cash flows, and how is that going to get generated more so? It's going to be more so generated with ASML shareholders, not necessarily Intel. Also, the other stock that now you're going to cringe a little. My favorite segment of Intel, Mobileye. Like, again, we're already seeing that divergence right now. I don't know, too early, too soon, right? Too early, too soon, because it's still relatively like early IPO and all that. But Mobileye, exceptional business. Kind of reminds me of like Google back in the day. You know, like Google back in like 08, 09, still super high growth, still doing just fine, but everybody else was collapsing and whatever. Mobileye, kind of similar situation. Next year, their business is not going to go, like, still going to be decent high growth, still going to do just fine, decent margin expansion, exceptional business as well. But yeah, I don't know. I like Mobileye. I like ASML. I think Brookfield Corporation. I think indirect investment is the way to go about it. Like, I'm still bullish on Intel, but I think direct investment, I just don't get it. I don't get it. I don't think you're going to unlock as much shareholder value as you are just doing indirect investment with it around it. That's just my opinion on it, though.
Okay, because yeah, Brookfield, they have the 49% ownership stake in the fabrication facility
in Arizona. Yeah.
And they have their facilities in Europe. I think the same deal.
Yep.
So yeah, the thing is, okay, so this is the thing. I used to be pretty pessimistic on Intel myself as well.
Okay.
And it was at the point where I started to see that the management started to do, they started allocating capital in what I believed was very favorable. One of the biggest disagreements I had was the initial plan for the Mobileye spinoff. They were initially planning on selling off about half.
Oh yeah, the whole thing. Yeah, that was very moronic. Yeah. But they didn't.
I love what they did now. They sold off a little bit of it just to have it public. And you bought shares of Mobileye, right?
I got one share. Share.
Okay.
I sold it, and I already sold it, and I got my tendies, like I said. And guess where Intel's going? To the ground. So yeah.
Well, we'll see, because at the price point where Intel is at, like right now, this is pretty much my cost basis, like around here. And I'm not reinvesting dividends. I'm reinvesting dividends maybe selectively. I accumulate my dividends and I redeploy them as I wish. But I don't really care for the dividend too much. I actually just think that at this price point, a lot's kind of been priced in. But we will see. We will see. We will see on Intel, because I could be absolutely wrong. I think that actually Pat's vision, I think I'm going to give it a shot. And that's kind of where I'm at. I'm happy with its allocation right now. I actually have no plans. If anything, if it drops a little bit more, I might boost it back up to like the 5%, but that's kind of where I'm going to keep it at.
Okay.
That's how I'm going to be playing it. And then if the price kind of drops a little bit further, so I might, bring it right back up to like a 5% allocation.
Okay. So my question to you is this.
It's kind of where I'm keeping it.
So why Intel and not Qualcomm? Like, do you
I had Qualcomm.
Is it similar allocation or is it?
Qualcomm's exposure to China really scares me a little bit.
Okay. All right. So that's a good one. I think the allocation. I think they have the highest Chinese.
They do. It's extreme.
In the whole chip industry. Yeah. So, but I gotta say, out of all the CEOs in the chip, I love this Qualcomm one the most. But
I would say he's second for me to Pat Gelsinger, but because you have the superstars of all retail investors is like Lisa Su and
I will compare Pat Gelsinger to like the Michael Jordan of the semiconductor space. Like he is incredible. It's just Intel is in such a rigid space. I think it's gonna be a really hard job for Pat. It's really hard job.
That's why he chose it, because he will become a legend.
If he does, yeah.
He's
already a legend. He's already a legend, but
but like just
like God
described, yeah, just like no one achieves what he can achieve. So yeah, that's not a reason to invest. By the way, it's not because like you're like, oh, he therefore has to make this work out for his reputation. Therefore, we must invest. No,
like for example, again, even though Pat Gelsinger was a GOAT, he also worked for VMware, and that investment has been okay. Just it's whatever. So I think a similar situation will play out with Intel, where it might play out. Like honestly, Fabio, I don't think you'll lose money on it. I think you'll probably have decent gains on it, maybe 40-50%, but it's probably gonna be like
we'll see if it outperforms the market from when I bought, but maybe it might not be one of my outperformers. It might be a kind of a rock on me, but yeah.
Could be. Your other ones like Netflix, Meta, and all that stuff's just gonna crush.
Oh, right? you want it? You want to go on like a Meta love fest? Like I'm super biased. Everyone knows how much Meta
we can leave that for a little bit later. Let's go more so on the anti stuff. A little make it more drama related, right?
Okay.
Let's keep it up. Let's still keep it with the chip space for now.
Okay. So next on the chip space, we have AMD. Someone asked thoughts on AMD. And Texas Instruments. I see Texas Instruments right there. Texas Instruments is a solid business, but AMD is also solid. I have AMD in the portfolio right now.
Yeah, AMD. Again, when it comes to the chip space, I'm just not interested in any of them. I think the ones that I'm really interested in is KLA and ASML. Yeah, but and I'm still doing a lot of research on KLA. It's a hard business to understand. What? Actually, no. Let me go back and say, every chip company is really hard to understand. Like there isn't a single one that I can think of is some easy company. They're all really hard to understand. But again, retail, they don't care. They look at gaming, graphics card, buy.
I know. Isn't it? I forgot. I also have a small allocation to Qualcomm still.
Hey,
I forgot about that.
I
have a small allocation. It's a small allocation to AMD and Qualcomm, but I'm kind of bringing them out. Isn't it always funny how when that basically that insane genius we have, and it's insane by the way in reference to how like genius they are in semiconductors, when they go and explain it to us, we're all just like,
yeah.
And then someone will say, but what about this? And then they just like break it down into some other way, and we're just like, again, like the moment you think you understand anything.
That's the issue with them. So that's why I have a philosophy similar to that of like Peter Lynch. There's some other investors I have a more similar philosophy with, where if I can explain it to a 5-year-old, I try to avoid it. Like with funeral company, that's so easy. I can go up to a kid and be like,
you're gonna die one day.
You know that cemetery? Mommy and daddy's gonna visit there. No, that's too dark. All right.
No, that's great. The humor is great. That's good humor.
Yeah. But see, like again, harder businesses, guys, be careful. That's all I gotta say. The chip space, just be careful. Like unless if you're like some massive nerd in the chip space, you really should avoid it. Because what if one of these exceptional chip companies drops 50% right now? Are you gonna scare? Are you gonna be scared? Are you gonna look at it and be like, whatever? Like again, like let's say Parkland tomorrow drops 20% for me. I'd be like, Yeah, that makes sense. Margins compressed. You know, I'm still bullish on people going through the afterlife. Like again, it's a more simpler business model for me to understand. And since I already have the conviction built in, it doesn't really matter as much. But chip companies, maybe that new floppy disk wasn't a success. Maybe this other new chip company has their new XYZ that's way better, right? Again, that's the main thing, main driver.
Floppy disk.
Whatever. Yeah, whatever.
I love
yeah,
it.
floppy disk.
Floppy
Yeah,
disk over here.
whatever. iCore 769, whatever it is. You know, again, it's really complex businesses that you need to make sure you understand fully. And if you can't, again, if you cannot explain it to a 5-year-old, you should probably avoid it. So
Yeah.
that's just me saying, if you can't explain it fully to somebody, then like again with the Parkland one, I simplified it so well because again, you already understand what the companies are. There's just simple businesses to understand at the end of the day. You don't need to invest in some crazy innovation company to get exceptional returns. But yeah, what's your opinion on AMD?
No, okay. So my normie opinion, right, on AMD, okay, is that they have transformed themselves to an exceptional company. They've taken advantage of Intel, resting on their laurels, and they've produced perhaps, well, they're giving them a huge run for their money in pretty much every space, except actually, well, the newer generation of CPUs. It seems like Intel really clapped back a little bit, but like as we were talking in the Discord community, I think this is AMD's like B team. Their A team is going to come out with the next product. Their B team is the one that came out with this product, and the B team's really good too. I don't want to, poo-poo on their B team. Their B team is good. Their A team is exceptional, and we'll have to see what happens to Intel in the next lineup, because that's when AMD's A team releases their product. Because that's just kind of how the product cycles end up being like. But so KLAC, you like this one, but you kind of are on the about it, or
no.
like?
I think KLAC. I just like to say KLA because that's a ticker, right?
Yeah.
KLA, exceptional business. I'm just trying to figure out, understand it a bit more. Now, will I end up actually investing in it? I don't think I will, because again, if I can't explain it fully, I think it'll be a better thought experiment that I researched it, I understand it a bit, but I might just be a guy that sits on the sidelines with this one, and I'll buy like some other simple business model like Jamison or Descartes Systems or Constellation or whatever, right? Like I'll just stick to some of the Canadian companies instead. But yeah, KLA, ASML, exceptional. But yeah.
What's your kind of opinion then on just going and saying, okay, I don't want to analyze the semiconductor space. I want to make my picks on the semiconductor space. I'm just going to buy an semiconductor ETF.
ETF?
Or are you down for just saying like, yeah, I don't want exposure to semis at all? Nah, I don't.
I will say that if I have to put myself in a spectrum right now, I think I would put more myself into that. I won't invest in any chip company right now. And again, when you invest in companies like not companies, when you invest in indexes, man, like the S&P 500, you got that semiconductor exposure. SCHD, pretty sure one of their top holdings is Texas Instruments. And that one has been exceptional.
What was it again? It was. By the way, I see your questions about PayPal. We are going to talk about that. I was just sticking in order from semis and stuff. Where was it? Yeah, Lamb Research. That's what I'm looking at. Lamb is LA or Lamb
LCX something.
Yeah, it's some weird. Yeah, LRCX.
Yeah, LRX. Yeah. Lamb has been just a mega compounder. This one, and I don't even know what the thing does. But whatever. Just a mega compounder. But notice, if you go back to Max chart, you see that massive where it just doesn't do anything, right?
Well, it went from, this 4 in here after the adjustments are made. That's still moving.
Oh wow, still a mega compounder. Okay, yeah. So
it's still moving. Like you're still noticing your capital appreciate.
Yeah.
And then you also have like the dividend growth aspect. So no, it's been a good business.
Okay,
but there's this one and Applied Materials. So AMAT.
And there's that one called Analog Devices, I think. I don't know, but yeah.
Well, no, the Applied Materials and Lamb Research, those are the two competitors.
Similar, yeah.
Yeah.
CC,
So
I don't
Applied
know.
Materials, I think, is the bigger one. Lam Research is the smaller one. That's right. Yeah. 90 versus 60, so about 50% bigger. Applied Materials.
And that's another thing with chip companies is like you got to understand that like there's different segments of chip companies, right? Like they're not all the same, and they all have different competitors. Like Lam Research and Intel, you can't compare them, right? Just like you can't compare like AMD to like Skyworks Solutions. You can't do that. Like they're just different.
Oh man, Skyworks. Skyworks is one that's like some people are looking at it because it it looks like it's a value now. So
But
SWKS.
I hate these types of companies like Skyworks, and what's the other one that you used to have?
I used to. I think I still have it. You're talking about Cirrus Logic?
Cirrus Logic.
Yeah.
I hate companies that have high concentration customers, man. ASML I give exception to because it's more so a mutual exchange between the two. But like, these companies, I don't know. Apple's already one of those companies that like they are not afraid of making their own chips. Not saying that they would avoid Skyworks or go ahead.
I was gonna say it has to be like kind of worth it to develop their own RF solutions because that's what Skyworks does. They develop radio frequency components, and for Cirrus Logic, they developed the audio codec components and also some power saving components, which is actually how they're expanding their business line. But yeah, no, to your point, I think Cirrus Logic is 90% exposure to
90?
Apple. Yeah,
Wow.
and Skyworks is like the 70.
I thought they were like
60.
in the 30s. Wow, completely wrong then. It's even worse than I anticipated.
No. Like Cirrus Logic, if Apple drops them, it's a dead company.
It's gone. Yeah.
It's gone. So you can notice it's in my portfolio. I've done really well on the position, but look at its allocation.
Yeah. And that's the other thing with the valuation. It tells you a story. If something's a 10 PE, it's telling you something, man. It's telling you like what is it? Is it the debt? Is it the concentration? Is it declining revenues? Is it the business deteriorating?
Be jealous. Be jealous of this. My goodness. Wow.
And where's the share price now? 100?
Dude, Applied Materials?
I think it's like 100 something, right?
104.
104. Yeah. So pretty much a 10x. That's crazy.
Yeah, not including dividends.
Oh, right. Dividends. That's a crazy yield of the dividends, isn't it?
Yeah, because right now the dividend rate's $1, so it's like a 10%, nearly a 10%. No. Yeah, it's getting up there.
That's a pretty high yield. That's a crazy yield.
Yeah, it's insane. All right, so people asked about PayPal, so don't worry, we're going in order, but I don't want you to think I'm going to skip over your questions. I remember your questions. We had 2 questions. We had, by the way, I do not. How do you pronounce this? Ho disparatilor.
Disparalator? I don't know.
We're just gonna call it HO.
Yeah,
HO and then Xavier. So now that PayPal's returned to about $70, because I have a video saying like $70 is what I'd be interested, 70 and below. It was a while ago. I forget when I posted that video. And then PayPal rallied to like $90 a share. And because I was buying other things. Unfortunately, it looks like I'm gonna have to almost pass on it again. Like I might buy just like a position, like it's just a starter position. But really, my capital, I really want to focus in on other positions. There's other
like GPN and the FIS.
FIS is one that I've been, just nicely accumulating. So they were asking because really, I mean, now it's down to like $69 a share. PE is now 17. Well, forward PE is now 17. Growth is still expected to be pretty strong. I think double digits still.
Yeah, it's gonna be so good. No, I love PayPal. I think they're great. I think they'll do just fine. It's just keep an eye on the first quarter and second one. It's gonna be messy for them, but because again, PayPal is a decent indicator of the discretionary spending stuff, right? So, PayPal is gonna do just fine, man. I think at this level, you can like clip it if you want. It will outperform the markets on a 5-year span. So,
I mean, look where it's returned, man. It lost all of its gains. It is back down to where? Insane. Wow. Wait. Oh my gosh.
Oh yeah.
Wait. What?
Oh yeah.
Where do we have to go back?
2017.
My gosh.
Like that's why I'm very confident in saying, yeah, this will probably outperform the markets now in a 5-year frame. At these prices.
No, that's actually insane to think about. I didn't put that picture in my mind
Well,
where it's
again,
at now.
same thing with Meta, right? Meta was like down at those levels as well. So
But that's the thing though, because you'll notice like a lot of people, a lot of retail investors always say, "Oh, I'll buy it when it's like, really far down." It gets really far down. Then
and
they're
then they're
like,
like, oh yeah,
the
they're
company's
like,
dead.
yeah. They're like, oh yeah, look at the time. I gotta like look at something else that's overvalued.
People are a totally different person when it actually happens versus when it's, at all-time highs,
Oh yeah.
etc., when it's flying high, when things look good.
Like, again,
Um,
they'll keep watching the Warren Buffett clips. They'll keep saying, "Oh yeah. You gotta buy the dip. Be fearful when others are greedy." But they're the ones that are actually fearful. But yeah, whatever. But yeah, I like PayPal. I think PayPal is exceptional. I think they'll do just fine. Now their parent company, eBay. Now that thing's trash. But
well, no longer parent
former,
company.
no, former parent company. Yeah. That thing is absolute trash. But like PayPal, I don't like the moat, but that's just from my understanding. I don't even think they have much of a moat, really. It's okay. It's okay. It's like, again, I'm not gonna. And again, with my investing, it's like I don't look for companies that are just like some massive monopoly. Like, it doesn't need to be that to be an exceptional return to you as a shareholder, right? The moat, yeah, the moat's funky, I think, at best. They do have competitors. Like, let's not deny that, right? They do have competitors. Something like I don't think FIS really has much issues in their space.
No.
But no, they really don't. Yeah, no. PayPal, yeah, they do. Again, that's the whole capital markets for you. Well, these companies are competitors, man.
PayPal, and then Square with Cash App. The thing with them is that they're always like, it's like a race to the bottom. Always, like, they're always trying to drive down their own costs, and therefore, it's not like, to me, it's not really that sexy of a business. That's why, like, when I'm saying, okay, like, I might buy like a small position of PayPal just because it's under the $70, but it's going to be like a token position, just because there's other things I'm really interested in at these prices. While I think that PayPal, there's a possibility it could do really well going forward from here, but it's not like the most exciting thing to put my money into. Even though it's like, oh my gosh, it's down a lot.
I think because of that added risk that there is competition, the moat is a little, it's on kind of like, I wouldn't say thin ice. I think it's a little bit better than that. But like, definitely it's not as safe as like a railway company or like Waste Connection or something like that, right? There are some inherent risks with PayPal, but that's why I think the upside is definitely a lot more exceptional from here.
Like if those risks don't manifest, then you pretty much, yeah. I agree with that, because there's a lot of the market's pricing in a lot of concerns, and I agree with you, because that's actually was I did a live stream. I think it was like several live streams ago, 3 maybe ago. It's about the like deflation, blah blah blah. It's like, okay, we're gonna probably have a decent holiday quarter, and then we kind of get into the Q1 2023. It could extend to Q2 definitely, but no, when we're gonna see it is Q1 2023, where people are going to maybe lose their minds, or the data is finally going to kind of show perhaps the reality of the consumer.
I feel like sometimes I'm one of the few ones in the community where like I'm kind of like the macro stuff's kind of cringe to me. It's like, I get it. I get it's all fun and games. Like, oh, what the Fed gonna do? Interest rate hike? What do you do? Like, what? At the end,
they don't matter.
They matter. But when y'all are buying TLT, I'm just like, damn. I'm like, y'all going all crazy there. Y'all are actually trying to bet on this stuff and saying, oh, it's going to go down 2023. It's going to. It's like, all right. Y'all can do that. But I think macro stuff, I think the best way to go about it, in my opinion, is back of your head, have a conscious play on it.
Well, hey, no. Those other plays that were made, they got popular because they got popular after people started seeing like performance on it. That's why. And then it slowly started to gain traction. I was like, what the? And it like spread into other communities.
Of course it did. Of
course
it
did. It spread into other communities. Like, it's just leaked out.
Like, that's an indication of, hey, you should probably not avoid it now. Whatever it was, it's too late. You're too late. But whatever. Again, people are very comfortable with that mob mentality, that cult following. Like, again, people don't want to get into that, and they don't want to admit it, but that tribalism really starts kicking in, and like just following the herd, following the sheep, right?
Yes.
But hey, the macro stuff again, they matter, yes, absolutely. But like trying to predict what the Fed's gonna do, it's like, all right, bro, have your little, have your little prediction ball and or the rates are gonna go down 3% and like Q3 at whatever. But I don't know. I think it's a little cringe in that department. But yeah, like anyways, back to PayPal though. Just ripping on the macro stuff.
I was cringing that department. But back to PayPal.
Yeah, back to PayPal. Yeah. No, I don't know. Like I think it'll. I think it'll do just fine in the next 5 years at these levels. Because again, I think larger market caps, not the ones I buy because they're more smaller, but like the larger market cap companies, I do believe the market is efficient. I think the market, what's that theory called? Hypothesis?
Efficient market hypothesis.
Yeah, I do believe in that. And so, and the market is forward thinking about like, what is it, like 6 months, something like that. So if that's the case, a lot of this stuff is already getting priced in. So don't be shocked if you don't see some massive moves in the first quarter, second. Maybe it's already priced in. We don't know, right? But
yeah, that's why mainly my strategy is always to focus on accumulating assets I like at prices I like. Like while I do have, well,
you got the trades.
I have the trades, right? And we'll see how they perform. Thus far, I don't want
the Xing pump. The Xing pump.
Oh, the sheep pump. We didn't talk about that when we were talking about Baba. So everyone probably knows me for my extreme pessimism on the Chinese stocks, but that doesn't mean I don't acknowledge when I think I can make money off of them. So
yeah,
on a sentiment trade.
Yeah, I avoid all the trade stuff. It's like whatever to me. It's whatever. I think it's all fun and games, but index investing, tax shelter accounts, personal accounts, I focus on long-term investing in individual profitable stock pickings. But yeah.
Someone's asking me to go over a BurgerFi.
No, don't. No. I know he's joking. He's trolling.
I know. No. That company might go BK.
Yeah.
For all we know. But that's like one of the fun stocks. Literally the thesis. If anyone asks me, thesis, the custard shakes. That's it. Has like the spare change in it.
Oh man. All right. What other stocks are we going over?
Okay, so we have some Canadian gems. Let's go over some Canadian gems. What do you got for us?
Yeah, you know what? Let me go some different. Actually, no, since I guess the YouTube viewers are probably different from Discord ones. Let's go with you want to start with Constellation? There's some other ones that I got, but actually, let's go with Descartes. Let's go with Descartes.
Descartes. All right, ticker symbol.
DSG for the Americans. DSGX, I think. Yeah, Descartes Systems Group. This is a supply chain and logistics, software company, SaaS business model. And because of the Canadian regulations, they can't abuse their SBC like the American software companies. So very exceptional in that department. Has been a mega compounder. It's one of the early survivors too from the .com bubble. Like if you show the .com bubble in the Bax chart, it's been crazy. Like it still has not reached that .com bubble peak of the company. But yeah, one of the very few .com bubble companies that actually survived, and they have thrived. Everyone talks about Amazon and all that other jazz. This is one of those other ones that has done really well as well. Exceptional. But the other one is called Kinaxis. I call them twin sisters, Kinaxis and Descartes Systems.
One of them I remember is more in consulting.
Yeah. KXS. But yeah, they're more in the consulting side of it. And they are free cash flow negative right now, so that's why I prefer Descartes. They are free cash flow positive. So, but they're both going to do exceptionally well. I have no doubt about that.
Coupa Software is no longer going to be publicly traded. They got taken private.
Oh, okay.
Yeah, you'll see. Let me just show everyone that. Yeah, you see this? They got taken private. Agrees to buy for $6.2 billion. Anyways, just wanted to randomly say that.
Yeah.
So, yeah, okay. Free cash flow positive, GAAP net income. Yeah, so they're actually producing more free cash flow than their net income is showing. How's their stock-based compensation?
No, they have none.
Really?
Yeah. And again, it's just the Canadian regulations that causes that.
Really?
Yeah, that causes them having very minimal. I'm pretty sure they do have a little bit, but it's not much.
Okay, so what's the regulation specific?
I
Like they just
can't.
tax it like to hell, or
It's something to do with that. It's like it's just a certain limitation, and that's why if you type in any Canadian tech stock, they just don't have the SBC. They just don't have it. If they do, maybe like if they do, it's because they're publicly listed on both exchanges. So Shopify has a ridiculous SBC, but if it was only listed in the Canadian exchange, then it wouldn't be the case. But I'm pretty sure Descartes only has a bit of SBC because it's also listed in the American exchange as well. It's not much though. It's still really not much, which I do appreciate. But
very
yeah,
interesting.
yeah,
Okay.
yeah. It's a weird dynamic that Canadian tech, and that's why when people always talk about like this software company or this software company, I'm just like, I look at my Canadian software companies, I'm like, this is way better though. You guys have you guys have more SBC than revenue. I don't think I'm interested in that, but whatever that. Clinton air cap on CEO pay spurred the so okay. Okay, so just different regulations of that. I guess Canada had the OG regulations on it, and then Clinton kind of ruined it for the American investors.
Wait. So yeah, Clinton era cap. He put a
On the
cap
salary,
on.
yeah, CEO salaries, they got capped. So now that's how the SBC. So I guess they're not capped in Canada in terms of CEO salary.
Jeez. Get different regulations. Yeah, they were trying to cap CEO pay.
And it messed up. It just there was a way around it.
Yeah.
So Clinton messed that up. That's crazy. Well, yeah.
See, that's good context. I actually never looked into why that was.
So you know how great that is.
New.
So
Mm-hmm.
now like again, all that any sort of that extra money, it's only really to the executives. But for the American companies, they just give these shares like candy to everyone. You're a janitor, you're a manager, you're whatever. Everyone gets shares of the company. It's ridiculous.
Whoa, Julius, wait. Is this for this company? Uh-oh, Kingdom. Uh-oh.
It's time to jump off a cliff now. Oh my god. Rick. Oh no, Rick. Is he talking about Rick?
Is it?
I think he's talking about Rick.
Oh, IOCOFR, by the way, is Internal Controls Over Financial Reporting. It's an acronym for that.
Oh no, if it's Rick, that makes if it's Rick, it makes sense. No, I want to make Rick a core position.
No, who? Rick? No.
I love Rick.
No. All right. Well, Ricky. Looks like yeah. Oh no.
Yeah. Oh yeah, Marcel, what's your Canadian stock that you want to suggest? Did he mention it? Because he had one, I think. He says he got one.
Yeah.
So
yeah, what do you got for us, Marcel? A Canadian stock.
I swear, if you say Descartes says Descartes, Couche-Tard, get that out of here. God, I hate Descartes. Sorry. I keep saying Descartes. Couche-Tard. I hate Couche-Tard. Trash. But yeah, whatever.
Which one is it? Every dog has its day. Oh, someone said BAM. I mean,
you want to talk about Brookfield? It's like such a it's like a long. I mean, didn't you make a video on it yet, or not yet?
No,
right?
I haven't made a video on it yet, but I can talk about it here in the live stream. So
yeah. Brookfield.
So this
these
is the
guys,
new one.
Yeah. These guys, I swear to God, like, why stop? I will say this though, I think their asset management side will probably outperform all of them, absolutely. But I still rather just have the main one that has exposure to everything. It's just more easier that way.
Simple. You're done.
Yeah. Like, why are you guys the way you are? Like, just stop, please. Like, what are they gonna do? They're gonna have like a Brookfield Janitor Corporation. Like, like, stop, man, stop, relax. Stop with the structuring changes. It's so goofy, man. Like, you look at any other one, they don't have these types of. Some of them do, but like Brookfield is like.
Brookfield's a little special.
Brookfield's like, all right, how can we confuse all of our shareholders? Yeah, let's just make like 7 different freaking structures. So annoying. So annoying.
So yeah, with Brookfield, man, it's I know you're gonna find it cringe, but they actually should do pretty well. I think that's what Monish Fabrai is why he's buying them. They should do really well should interest rates fall.
No.
Like,
yeah. Again, even a guy that doesn't really care. Again, that is part of my thesis with Brookfield Corporation is yes of the interest rates. So I do care about macro a little bit. All right. But is it my main thesis when investing? It's no. But again, with these asset management companies, it makes sense.
Except for that one business line they have, which Fu Hap fell asleep now, but he went to bed. But Oak Tree that they own.
You got Mr. Hard Marks over there.
Yeah, exactly.
Yo, he's like the smartest degen. This guy goes for like those depreciating assets. But yeah, I don't know. Yo, he does exceptionally well. Like if you look at his portfolio, I don't know any of the stocks. I don't, because he goes for those very depreciated assets. I mean, you'll do a better job explaining it, but like
he goes for distressed debt, basically.
Yeah, exactly. So yeah, it's crazy, man. Just he does really well with them. Nobody else can mimic what he can do. Like, percentage. Your boy is that BurgerFi?
That's BurgerFi.
Is it like same percentage as TTCF, or what do you think?
I'll bring up the stock, but this is not. This is like maybe the opposite of an endorsement, because like the risk is like insane. Look at this thing.
Wow, what, bro? This is a narrow cap. Why are we showing it? It's YouTube.
It's like a strangely more of the liquid ones, but yeah, it is a narrow
wow, it's
cap.
actually
Like,
liquid.
look at this.
It's actually liquid. What? The short interest is not even that high.
Well, it'd be too expensive the short at this point, probably.
Okay.
So yeah. If there were any shorts, they've already covered. But yeah, no. Look at the performance. It's down over the 5-year mark or the 1-year mark. It's down 75%.
If you had the Lufufu strategy, BurgerFi would have been your largest holding. Right?
Yeah, because yeah, exactly. If I was like unironically Lufufu strategy, it would be like, oh, you go to a BurgerFi joint and you're like, oh, there's a lot of people here. Oh, I have to buy the stock, buy it all. Okay, we're gonna talk about Chick-fil-A because that's the stock. Oh, I would plow so much money into that stock.
Privately,
so much money into Chick-fil-A stock.
They just got to be privately held. I mean, you know what? Yeah. They have no pressures to ever make that public.
No, they don't.
Yo, Dan, get your old booty out of here with SoFi.
Oh no, we got to talk about SoFi. We're not getting out of SoFi. You're not getting out of SoFi.
Yeah, let's get out of SoFi.
I mean, like, look just on the surface, like their position right now it's pretty terrible. Like they don't really have many avenues to escape. They don't really have a way to dilute their way out of this. They're fairly likely to go BK.
Oh wow.
Yeah, no, I'm not gonna like tell you otherwise. This is fairly likely to go BK. It was literally the fun stock this entire year, for me. So
that's crazy. Oh man,
I threw like some money away. It's whatever. We still made in percent terms, this year has been like one of the better years compared to the market. So
it's cringe because like you spammed this company's page, man.
Yeah. Well, to troll. So for some context, in the calls, I would sometimes go over like very complex topics. Yeah. But in the background, I would troll everyone with just having the BurgerFi website go on loop. It would just be the burger.
Horrible garbage.
But you got to have fun. You can't.
Yeah. It's cringe though. But yeah,
I would do this, like to go here.
No, you got retail investors that say that though. SoFi owns 2 football streams. It's like, oh y'all are...
This is what I would do.
Trash.
Just be no. Where's the looped video burger? There's one that's like a looped video of a burger. Where is it?
They're going bankrupt so hard that they had to get rid of it.
Yeah, they couldn't afford.
Yeah, their software engineer left.
No, seriously. But I'll eat their food still because I actually like a lot of their food. So, anyways, that's just that. Yeah, I think there's a good chance based on where it's at. I think they tried to grow too fast. They should have been more conservative with their growth.
Yeah,
but we'll see them.
Oh,
All right,
fun fact. Guess who's profitable now? If we're in this space, Dutch Bros. So
Dutch Bros is profitable now.
Yeah.
Oh, good for them.
I'm already going all in. No, I'm just oh God, my favorite speculation stocks: Dutch Bros, Mobileye. Oh, great company.
Yeah, my favorite speculation stock is McDonald's. You know, I don't know if
that
one's gonna work out.
That's
I don't know if that one's gonna work out.
Yeah, that's a really good company.
Yeah, I might lose it all tomorrow.
Do we have to talk about this? Why don't we talk about Zebra Technologies, like, or something, man?
No. We can't talk about good companies. We're not allowed to do that anymore. For the rest of the night, we have to talk about garbage companies.
No, you got that freaking Tom Nash wannabe that's doing that. Like, why do we need to?
All right.
No, not wannabe. More like a pet.
Oh my God. Right, tell me how you feel. Tell me how you feel without telling me how you feel.
This is absolute trash. I'd rather buy Honest than this. So, actually, no, that's disrespectful to Honest. Let's go with I'd rather buy Smith & Wesson over this. Absolute trash, man. This is like absolute garbage. Like, if you buy this, I have no sympathy for you if you lost all your money. You should live in a cardboard box. So, yeah. This is
deep-seated hatred.
No, it's so popular. You throw it, you make a video, guaranteed 1,000 views. Doesn't matter what your size is, guaranteed 1,000 views. You make a video on SoFi.
Well, Arthur, we did actually technically go over there. I went on the peer section and I showcased like the cash they have on hand, the debt that they have on hand, and the cash burn.
Pristine. Oh man.
So wait, do you buy Fiverr?
I like Fiverr. It's a smaller allocation. It's very small, very small. My favorite. It's basically what I've done in one of my bank accounts. I have an Israeli portfolio. So Perion Networks, Mobileye, Fiverr, Wix.com. There was another one as well. There was an inspection company for the chip industry. I forgot the name of it, but it is a smaller. They're all just
Teradyne.
Huh?
Teradyne.
It's like cat. It's like sort of the C. Some other one. It's an inspection company that inspects components of the semiconductors. It's in Israel. It's done really well with the market. It's a deep value play as well. Wix is fine. Wix is fine. Wix is like, I guess their best comparable. I don't even want to say it, but I guess Shopify is their comparable.
Don't you dare! Don't you dare!
I don't want to.
As a Canadian, how could you do that? How?
No, I know.
As a Canadian,
I know. Well, like, it's a lower growth company, but I think they'll do just fine because they have decent projections of their free cash flow in 2025, 2026. Fiverr is share diluting fire. Yo, hey, again. I think it's true though. No, it's true. It's true.
What's Fiverr's ticker symbol? I forget. It's FVR? FVRR?
FI? Oh no, FVR. Yeah. Wait.
Is it this? Yeah,
yeah. So I do have an Israeli portfolio of all that, but yeah, this thing's gonna keep getting destroyed. But I do think freelancing industry will do just fine.
What about their competitor Upwork? How are they doing?
Upwork's great too, but I think Upwork's free cash flow negative.
Are these guys free cash flow positive?
I'm pretty sure these guys are profitable.
Yeah, they are.
Yeah, so I just focus on the profitable one.
Not net income.
SBC. That's where the
SBC.
SBC comes in.
All right, we're gonna take a look quickly at what that looks like. Oof.
Oh, look at the
dimension. You ready for this?
Yeah,
ready for this? What the living?
They're like, all right, boom.
I think Arthur here has a definite point.
No.
What happened to the share price?
Oh man, I wonder.
No, this might have been like, was this an acquisition? Like, this is strange. This is very strange. What happened here? There has to be some context. 2019. Let's go back 2019. Oh no, they went public. Oh, that doesn't count. That doesn't count.
They still did massive dilution though.
No,
Like,
that doesn't count. So what we're gonna do? What time period? 6/30/20. So
they
we're
still
gonna
did
go.
decent dilution though. But yeah, it's
Is there a way to just do the year? Can I just get the year, please? Oh my goodness.
You're just like manually doing that.
Yeah. Okay. Fix that, Seeking Alpha. Oh, okay. There was a way. Gosh darn it. We're gonna do 2022 December 15. Just apply. Then I want as a percent. That's not that.
It's not that bad, but still SBC.
It's not that bad.
It's not that bad. SBC is still quite a bit. There is shared dilution, and there is.
It looks way worse. You see, that's why we investigate the context, ladies and gentlemen. Something that channel will not do.
you wanna go back to SoFi? We're talking about Fiverr. I don't mind Fiverr. But yeah.
Okay, we can talk about Fiverr and mix in SoFi and relate them together. Like,
why
yeah, like we should build an ETF
of Fiverr and SoFi.
Fiverr and SoFi 50-50. That will outperform.
Yeah. One of the super investors, he invests in Wix. That credit company, Rob Vanel. Like, what was his FI holding again? It was like that.
I can't respect Rob Vanel. He's got Credit Acceptance Corp now, still in his portfolio. He should.
To be fair, he's held it for a decade though, so like he has some exceptional returns on that one.
But he needs to get out.
He should, but he won't.
He should have gotten out. Maybe he just doesn't want to pay the tax. Fair enough.
Yeah. Yeah, Salesforce. Oh no, wait, hold up. What was the other one? Oh yeah. Carvana was like a 14%.
Of that guy, Rob Vanel?
Yeah.
Oh no, respect gone. Respect gone.
Credit
acceptance. Credit acceptance. I was like already kind of like, okay, man, you got to understand that.
He had Carvana, Wix.
You don't want to hold that. Carvana. Oh no, Rob.
Wix is also down like 80-90%, I think.
Who was the YouTuber that was recently been inspired by Rob Vanel?
J Money.
No, he's not. No, he's not. He's not that much in Wix.
No. I think his largest holding is still
Credit acceptance,
and then Meta, and then Salesforce.
Oh, respect gained. Respect has been gained there.
Yeah.
Meta.
Well, Salesforce, same thing. I think he's been a shareholder of Salesforce for like a decade as well. So
a decade. Respect gained. Respect gained.
No. Again, no.
Respect for Credit Acceptance, by the way. He bought a good price.
No. Again, a lot of the stocks he held it for a very long time. Slack was also one that he had, and that got acquired by, guess what? Salesforce, right? So
if the audience can't tell, I'm obviously joking. I'm not disrespecting because he had a bad pick, like with Carvana.
Yeah.
It's bound to happen. Right.
Yeah, it's bound to happen. But like it was kind of weird because like it was like at $20 and he just kept aggressively buying more. I'm like, bro, what you doing there, bro?
People make mistakes. He's welcome to make
mistakes. Yeah, he's human. Yeah, he's human. He's allowed to make a bad mistake.
That's where I want to bring for us the distinction for like that small criticism we had for Rob Vanel. And not a criticism. It's not even criticism. It's just, it's talking about it versus like, certain content creators. Because also Rob Vanel he's a professional. He manages a portfolio professionally, right?
Yep. It's I think it's about 300 million.
He's not promising anyone 30% year annualized rates of return for $20,000 in payment.
He's a hedge fund. He's a hedge
precisely. Fund. Yeah. So it's a totally different
situation. Yeah,
exactly.
Yeah. So
so Fiverr,
I like the company. I think it's, as a speculation play, I think it's a great way to go about it. But like, should you make it like a Jamie LaFay allocation? Probably not. But yeah.
Are they still growing nicely year over year or no? 24.
Yeah, I think the growths are probably gonna be like lower single digits. 22. Actually, you know what? Recession. When more companies use freelancing stuff?
They probably cut costs. It's more expensive to keep around an employee than a freelancer. Yes.
So I think I don't want to say recession resistant, but like I think Fiverr would do, and Upwork, they would do better off if they would do better in a recession actually. So their growth should be fine. Profitable. Andrew, they are profitable. just free cash. They're free cash flow profit. You know, they are. Fiverr is a profitable company.
Well, they have a forward P of 48.
Oh, so they might be net income profitable. I think people are looking at the net income. Again, they're negative there because I'm pretty sure it's the SBC that made them negative. Last time I checked, they weren't. Should we look at their recent quarterly filing? I'm pretty sure.
Yeah. Cash flow wise, you're right. I just checked that. Cash flow wise, they are profitable.
Yeah, cash flow. They're profitable.
I have to look at a 20F. I don't want to look at a 20F. I hate navigating through them.
At least we got rid of SoFi. So that's
let's do this because this is easier for me to navigate right now. It's much easier just to click on this. So yeah, this is the income statement. Yeah, income statement. Trailing 12 months. Net income line item. Yeah, they've never been profitable. But cash flows.
Cash flows.
And let's see, that's SBC right there. Ooh,
yep. That probably explains it to you what their net income.
71 million. And otherwise, they're not really that much cash flow positive. You would think a company like this would be more cash flow positive.
I would think so. Yeah,
making more money because they're just a platform. They just take a fee, but
yeah, I think they will expand those margins a lot more exponentially for the decade. But again, this is why this is not something you make some large holding. This is more better off as like a speculation play in an Israeli portfolio. But whatever. Because that's what I have.
Arthur said he's heard enough from you. He's gonna go make it a Jeremy. Oh my gosh,
Jeremy Lafard allocation.
He's like, no, enough. I'm going all in. I've heard enough. You've convinced me.
Oh man.
All right. No, we need to come back to this.
No. I thought Fiverr was enough for that. Oh.
No, we need to come back to here. So unbridled thoughts.
I already gave you my dark thoughts of it.
I think as a bank, it's literally one of the worst banks I've seen as far as the book goes.
Could you remember when they were flexing their student loans? That was crazy,
bro. No, get out of here. That's like definitely not something to be proud of. As far as like their personal loans. Oh my goodness, I've been hearing people talk about the personal loan stuff. Oh, I don't even know what to say, man. I don't even know what to say. I mean, enough said, really, about SoFi. How are they? Are they going nuts? Let's see if they're going nuts with this.
It's a newer company, though, right? But I guess they.
Let's go to the 1 year. Yeah, no, fucking terrible. What the fuck is this? These are always like retail. Always finds themselves in the most interesting situations.
They like the most garbage stuff. Why? Stop.
I don't even know.
Help yourself. I mean, you know what? When I was newer to the markets, I blew up my accounts. The first time I blew up my account, BlackBerry, one of my larger holdings.
Bro, Arthur's so funny. Look what he said. I prefer JetBlue when it comes to banking. What does that even mean?
I don't know.
MMTLP isn't garbage. What do you mean? Oh, we can't say that name. Oh, no. They'll come for us.
Bro. Dude, MMTLP. I made a video on them. And I regret it already because I'm like, oh wow, the amount of death threats I got was crazy.
You did?
I got like 3.
Okay, no. Now we got to talk about that. That's insane. All right, talk to us about that. Talk to the audience about this.
Yeah, so I just made a video. Look, okay. You know what? I will say that I was trolling super hard with the video. I was just basically ripping on them. That's all I was doing. People are like, you shut your mouth. You can't even buy the shares. I'm like, bro. I'm literally just talking about the financials of Meta Materials. So, but hey, I'm like, I also talked about, oh, look, it ran up. They had the little banana.
Is it the one you posted 12 hours ago?
Yeah. I had some I deleted as many comments as I can. But yeah.
So it's this one, everyone.
Oh, yeah.
You deleted them, though, right?
A decent amount, yeah. Is this a.
Oh, no.
Look, oh, wow. Even with me deleting, look at this.
Look at this guy over here. This
guy. Freaking trash. Look what I said to him. Reply. I called him a liberal.
Oh, here?
Yeah. But yeah.
Why even car way off tangent? Back on course. Please.
Oh yeah, no. Vix is an OG subscriber. He doesn't like when I roast trash stocks. But yeah. Yeah,
There's always subscribe.
yeah, he doesn't like it.
Oh, this guy does not like your
Oh, no.
commentary on
Oh,
this.
yeah. So I roasted Bird Lady.
He really has solid views. What type of world are we living in?
Oh, man.
Oh, and this person, this is what I don't get from YouTubers bashing other YouTubers about the decade to invest in. What they decide to invest in. Sorry, their money is not your money, so why care? I mean, this kind of misses the point a little bit because it's not just about that, but yeah, whatever. Yeah. Anyone who can turn them. I mean, like that's why I say to regular Joes, it's like, yeah, do whatever you want. I'm not.
Yeah, no. All the video was is like, hey, it's like, hey, bro.
By the way, suck a bone.
At least he called me sir, so respectful in that department.
This is a parody channel.
Yeah, of course. It's all parody, bro.
This guy has to be joking.
Yeah. That guy's good.
MMTLP. Oh, let's well, someone asked about
Oh man.
Wait, Ricky. I prefer SoFi when it comes to funeral homes.
I prefer is this man roasting the funeral? My precious funeral? No. No, my precious funeral? You are all gonna burn. No, that's fine. One of the other companies I'm researching a lot is like Pet Value. That's the PetSmart.
Oh, that's another good one that people don't know about.
Yeah. I mean, if you're American, I don't think you would really find it.
Oh no, you go all in. What are you talking about?
Yeah.
Well, we'll compare this. How about this? Let's compare it to Petco.
Sure.
Or PetSmart, right?
Yeah. Some people like to compare this to Chewy, and I'm like, oh, that's cringe.
But... Chewy.
Yeah.
Why? What does that have to do with Chewy? Chewy's just an Chewy is the Amazon.
Oh, Lincoln that said y'all missed my comment.
What comment did you say, Lincoln? Retype it. It's not showing up for me.
Lincoln, just type it one more time. But
type it one more time because I didn't see it.
Value, exceptional company. They got decent growth ahead of them. Same store stills is still double digits. I don't expect that to ever change. People are going to always continue to have more pets. Now, I will say the growth will probably slow down. And there were some exciting times for the company. But I don't see a year where they don't have a year that's growing. Exceptional business. They do great. They acquire other of these like pet companies as well. They got a better presentation than Salesforce.
No, they do not. You get that out of your mind.
Oh man.
So this really is what we talked about on the call today.
Yeah. Good it's a recession-proof type of stock. So 2023 should do just fine for this company. Year to date, crushing the markets, up 18%.
I was on the Kingdom video. Oh, I closed out the Kingdom video.
Yeah, it's fine. All right.
I wanted to find this part. There's a part where they actually explain their breakdown of corporate-owned stores and here, there's
franchise. Yeah, they got the franchise network. Yep.
And then they have look at that. You're an owner. You must work 40 hours a week.
You know how great that is? That's fantastic. Oh man. Average franchise set tenure of 10 years, 5% annual turnover. You got your corporate core as well. I really love the same sales scores because again, it's one thing to just open up a store, to get that revenue by avenue, but then it's another thing to actually have genuine organic same store sales growth, like organic revenue growth. And this company has done that really well. And again, they are the market leader. Okay. And they're going to still continue to open up more stores as well.
Yeah. My concern is like they've already kind of reached, look at that. 72% of Canadians are already within 5 kilometers.
Mm-hmm.
Last time I checked, a 5K, I could run a 5K. It's pretty close.
Yeah. Oh, so you're saying more so as like the penetration is because there's not much there anymore that, the growth might slow down in that department. I just think that there will be decent price adjustments and keep increasing over time. And again, more pets, more products you got to buy, all that stuff. So that's the way I go about it.
Actually, no, you're right. Scratch what I kind of said. I'm just thinking about store expansion. Probably is not going to be as practical going forward as much as before. But they could have higher volumes, absolutely, and that their proximity to the customer makes them a really good place for, let's say, their delivery network, right?
Yep. And that's going to be really good for them. And I do anticipate this company to eventually use Descartes or Kinaxis, just like Jamison Wellness has done with Kinaxis. But yeah, again.
Oh, that's interesting. Your overlap with those two.
Yeah. I'm telling you, all these Canadian companies I buy, they all interconnect. And here's the funny thing: all the Canadian companies I buy, they don't even involve the whole Canadian market. Like all the ones that I do not invest in, like they're like I completely ignore the whole Canadian market.
Thing is, was it Petco or PetSmart?
I don't know. The American one, what was it called? No, PetSmart is like pretty sure that's. I think PetSmart's private, but they publicly listed Chewy. I think that's what happened.
No. One of them is public. Who was public?
BarkBox was that one? Then you got Wolf. Wolf, WOOF. Julie's the same.
One of them was public. Oh, Wolf. Thank you. Petco. There we go.
Health and wellness. Oh no, is this something like?
So they they're basically trying to transform the company where it's like, you can take your dog or, cat and, do basic medical care, stuff like that, pick up supplies, get delivered, stuff like that. This is a Ross Gerber stock, by the way. I'm wondering. And let me just tell you, I think back when he did talk about it, the PE was like really low, like it looked really cheap. Now the PE is like 12, so it's looks a little bit more expensive.
Look at that short interest, 20%.
Yeah, Degenerate.
Wow. Whoo! And again, the one that I showed, Pet Value, similar time. It publicly listed 2019, 2020, and it's just crushing everything.
Yeah, so like I would say, my gosh, like let's actually bring up all these. So we don't want this, we don't care about you, we don't care about you, we don't care about you, we don't care about you. So what's the other one? So it's Chewy.
Oh no, Chewy. Oh boy.
And what's the one we just looked at?
I don't think Seeking Alpha does Canadian to American, right?
Pet? Well, let's try here.
Yeah, Pet.
Oh, let's just put WAG in here. I don't know.
WAG.
Huh, Pet what?
It's just literally just called Pet Value. So space value. LU. That's it. And yeah, it's not there. I don't know. It's weird. It's weird.
Yeah. Honestly, if anyone's listening here, such an easy fix.
Like seriously,
such an easy fix.
Like, come on, Google Finances figured this out. Like come on now.
Such an easy fix. I'd love to compare them. You shouldn't segregate them just because you shouldn't separate people by country.
Yeah, like come on, man.
I think maybe the reason why they do it is because they haven't figured out a way. I could easily build that out, by the way, where you can automatically just convert all the currency to one currency. Super easy to do. It's easy to figure out. No excuse. Anyways, we can't do that. Whatever. So we'll keep it at this. Compare.
All right, let's see here.
So Chewy's at 17, which is bigger than Wolf. Therefore, let's buy Chewy. Done.
Yeah. Done. 80 million market cap for WAG. Damn. We threw
what the hell is this? I think this is. Let me see WAG. I forget what this is. WAG. Maybe it's like that. Is this that website where you?
WAG. Oh no! Is this the dog walker? Oh no! Is this his website?
Oh, that's why I looked at you as soon as I saw like the website link. I was like,
"Oh my god!"
I just gave you the look, and you mentioned.
Oh no! It's Dog Walker. Oh my god! Here when you need us. Yeah. Dog Walker's always available.
Oh yeah, what Andrew's saying is actually true. There's been plenty of studies that actually show that heavily shorted stocks actually tend to underperform over long periods of time.
Wow.
Oh, whoa. Like short sellers are kind of right.
Whoa. Who would have guessed?
So, oh, you know what this was? I can already tell you what this was.
Back.
Oh, SPAC every day. This is a SPAC.
Yeah.
It was part of that SPAC craze. It didn't even like do anything. It just literally just died. And they
It
they
was like,
SPAC'd out in 2022. They
oh,
missed the party.
oh, who in their right mind was like 2022? Bear market. Yeah, let's back right here, boys.
But you know what that means, by the way? That means they actually ran out of like VC money. So no one wanted to buy them. And, they're like, oh, no one wants to. I can't go back. Oh, crap. We lost our space. Whatever. So I'll just restart it. Get out of here. Get out of here. Get out of here. Get out of here. Well, get out of here. You're not even useful to me. So we're going back to Woof. Woof. And we're going to go to Chewy. And that's about it, because I think the other one's not comparable.
Chewy. Oh, Chewy.
Look at that. Chewy. Cash flow negative. Oh, yeah. We're buying this. Cash flow negative. Oh, yeah. We're buying this.
What is Chewy doing that's causing them like burning that much?
They're trying to just get market share as much as possible. But here's the thing. So probably a lot of this CapEx might be that growth CapEx that we were talking about. But
okay.
So
this isn't some company that's going to go bankrupt or anything like that, right?
Not anytime soon. So like Chewy is the only one I'd actually be, moderately interested in. Wolf is one that I'd kind of be like, man, are you going to be around? Like someone's going to probably take you private, or yeah.
What's the short interest on Chewy? It's probably not that much because it's 17 billion, right? But like,
no, it could be high. It's
insane. Ooh, okay. All right. Never mind.
Yeah, so maybe United States just doesn't have any pet companies, or the ones that are private, because isn't PetSmart private then? Maybe PetSmart's the only one figuring it out.
So PetSmart's private, but Chewy is a subsidiary that I'm pretty sure they threw it in the public markets. So that's what
smart on them.
Yeah, PetSmart acquired them for, I'm pretty sure it was like $1 billion, something like that. Oh, so they made tendies on this one, didn't they?
Yeah, well, Chewy when it IPO'd.
Yo, they made.
Well, it IPO'd at 22. It's still actually. Let me see what everyone's. What's the general consensus on here? So it's strong. We have a sell rating, and it should take me to the article.
It'll be like a Robert Kiyosaki article. It'll be like,
okay,
just
so
go.
Why don't you take me to the article? Oh, here we go. Easy. Did you delete it? Where's your freaking article? I wonder. Oh, there it is.
Chewy is down 66%. Okay,
it's post October, so the timing is always important. No one commented. No one read it.
I love how these bear articles start after the downward pressure happened. It's like, all right.
Yeah. Isn't that right?
Yeah, it's kind of cringe. It's like, again, I got a bearish thesis on like Amazon. It's not down that much yet. I mean, I had a bearish thesis on Amazon since it was. I don't know. It's just
you're like, you're I heard you're like Paul Gabriel. Like you're just. You've been shorting Amazon since 2001.
Yeah, 2001. Yeah.
You waited till after the .com bubble burst, and then you shorted it.
Yeah, right there. Oh, somebody did though. Actually, not somebody. I bet a lot of people were. A lot of hedge funds probably were.
But. So, oh my gosh, wait, what is this? Speaking of SPAC stocks that went in 2022 and got effed, check out Grindr.
Oh no!
Oh, I'm not typing anything. Well,
don't type it, bro. Don't type it.
Oh yeah, this is the future. This is the future, ladies and gentlemen. Just betting on dating.
Yes.
I stopped myself and I changed it to dating last second. Just betting on dating.
Yeah, dating. Yeah.
Yay, PG-13. PG show.
Yeah.
All right. Wow. Okay. These people have a problem with some people.
So oh wow. Who hat's gonna hate this? Like those analysts. That's crazy.
Yeah. Look. Wow. I'm not gonna go on that web.
No. You.
I'm not gonna go on that website. Let me see the report. What was this? Oh, revenue growth, 30%. Revenue growth. Remember that most important metric, everyone.
Revenue by avenue.
Revenue, my avenue. That's exactly how we say it. Grinder's only down 70% since last month.
Only
7% since last month. 1 month chart. Well, we got to customize it a little bit. He's probably talking from here to there. My goodness.
That's crazy, bro.
It just mooned. Yeah, it's probably super expensive to short. So probably not practical. Yeah. All right. So here's a question for you, Kingdom.
What's up?
Next 10 years. Pick your champion.
Champion stock?
Yeah, champion stock. Can't be an ETF. That's cheating.
ETF.
It cannot be an ETF. That's cheating.
Okay, so like how many stocks? Just one or a couple?
Just one champion.
I could go with the safe answer with Constellation. I really could. But I would say Jamieson Wellness would be my champion, I'd say. I'm not even invested in that one yet.
Really?
Yeah. Another one I'm looking at is Aidis Home Care Corporation. That's another one I'm probably gonna end up buying. But yeah, it's the home care. It's the home care stock. So basically,
I remember that one. Yeah.
Yeah, Aidis, fantastic, has crushed everything. I was gonna say the Parkland one, but like I've already shilled on it so much. I'm like, all right, let me go with something different. So, Jamieson Wellness. I think that thing is gonna do just fine as well. But yeah, I don't know. Aidis Home Care. People get older. They're into those nursing homes, and then Afterlife, Parkland. Always bullish on that. Also, recession. People like to go to the afterlife.
What happens?
Yeah. Stuff happens. Economic Jesus Christ happens. All right, let's just call it that. All right. But yeah. Amen. Hallelujah. All right.
Fair enough. Man, you answered yours so quickly. I don't even know if I had to bet on one. I asked the question. I don't even know the answer for me.
It's just one winner. Just say Netflix or Meta.
Yeah, but I feel like that's vanilla. I was trying to be clever with mine. You know, it's like
yeah.
I
went real interesting with mine. Relatively newer company.
I know of a ticker. If I could just get my shares in.
Oh, that one.
The unnamed one, but like I could just get freaking shares to, you know.
Yeah. You can't get them. Shares of that one. No liquidity. Fuhat has the liquidity.
Yeah, Fuhat has to give me his shares. But yeah, no. I think like maybe Amazon at the right price, man.
I don't know.
If I get the price on Amazon,
I mean, Etsy's better, but yeah, whatever. It is what it is.
Even like CRM at the right price might become like a contender for that.
What price were you thinking of Salesforce?
I was thinking during the call, I was thinking like around like the 112 range is probably where I'd be interested. But Salesforce is actually one of the ones that would be pretty interested in buying. I'll be following it a lot, you know, since it's like big tech. But look, like the other one that, because I'm biased at Alphabet, I'd be like a little bit more, you know, explorative because I feel like that'd be more interesting. But you know what? Maybe like one that, you know, people weren't expecting, Markel. Right.
Markel.
Like I know I'm not going to lose my shirt,
right?
You know, because you're pigeonholing me into one stock, so it's kind of cheating because it's like we can't pick an index. So it's like Markel, probably not going to lose my shirt, probably going to eke out a positive return.
Oh yeah, Markel. So. Yeah. Honestly, like I could pick out 10, 20, 30 that might like. They're all probably going to do just fine. Like they're all going to crush it. Like I think Zebra Technologies at these levels.
Oh, we didn't talk about Zebra.
Zebra, fantastic. Align Technology.
Oh, Align Technologies. Yeah, Align's one that Zebra's one that no one even talks about.
No one even knows
what.
Bro, yeah.
Wow.
Yeah.
It corrected.
Oh yeah.
Oh, I didn't even notice this.
Yeah, bro. It's like I will say, you buy Zebra right now, yeah, your performance is probably gonna be pretty lit.
I haven't seen Zebra since like 2019.
Yeah. It could be in those levels. Well, no, not yet, but getting close. It's getting close to the 2019 levels.
My goodness, what
600 to 248, bro? Like absolute sheer destruction.
Yeah, no, wow. I love bruh. Bruh, when he comes
Oh,
in, look,
bruh.
bruh. Every time he comes in on the live stream, bruh
Just
says,
bruh.
bruh. Wait, I gotta bring up your comment, bruh.
Oh man.
Always cracks me up. It's also like a well placed bruh, but bruh, you missed out the bruh when we were talking about Grinder. Like that was the moment for the
That
that
was
was
the
the moment for bruh.
But yeah, like Zebra, exceptional business, fantastic. They're
Everything.
great. But yeah, honestly, I don't know. I want to pull the trigger, but I'm focusing on my Canadian tech companies.
Yeah, yeah. That's the part. That's the part. It's like there's always that situation where you kind of have to deal with it as an investor. You like a company, but there's other things you like want to buy. Like,
Exactly. But like if someone
sorry.
like was telling me right now, be like, "Hey, Kingdom, is Zebra a good investment?" First of all, I would say, "Bro, you should be asking some random dude that." But like, second of all, I'd be like, "Yeah. A Zebra, absolute, will still be a mega winner. Um, it already has been, but I do think it's going to continue to do just fine." Eric,
Yeah, man, I did not even notice that Zebra had to come down so much.
dude,
No one talks about this company.
nobody's great. Barcodes and shit, like scanners and shit. Love this company. This company's exceptional. And the Align one, Align. There's some talk with Align. Align gets some decent exposure. But yeah, Zebra, nobody.
Yeah, instead of Align, people want to talk about Smile Direct Club. Instead of Zebra Technologies, they want to talk about Palantir. Instead, they're not comparable the same way, but I'm just
Oh yeah.
instead
No,
of
you know
like,
how funny that is?
Mhm.
SBC, the garbage trash version of Align, is the more popular stock than Align because it's trying to be the next Align. It's
It's
like,
not even close to being the next Align. It
yeah,
doesn't do anything.
exactly. It's going bankrupt. Oh.
Yeah, that one's probably the next one of his. It's gonna go
Yeah.
bankrupt.
The only one out of Jeremy's stocks that actually won't go bankrupt is Honest. Honest actually might do okay.
Yeah, do you want to talk to us about that?
No. It's all good. I ain't trying to give no positivity to Jeremy Lofufu. No. But privately, I can say to myself, yeah, it's Honest is probably gonna do okay.
Fair enough.
They brought in Carla, Amazon, worked with
Man,
Amazon.
see, I love that we did this live stream. I did not know that Zebra had come down to these levels.
Yeah, Zebra is exceptional. Yeah,
Oh,
Zebra's great.
McBuda Tees said good morning. You know what that means.
Oh
We
man,
stayed up too late.
we stayed
We
up
stayed up way too late.
live stream. I was saying, hey, we should don't do an hour because you've been live streaming all day, man.
I've officially been live streaming for like 8 hours today.
Oh man, 8 hours. That's crazy. That's a work day, man.
Well, it's because I messed up the audio on the private call. So then I had to just do a redo summary. And it was supposed to be like an hour.
Oh, yeah, you done goofed up there.
No, it's because as soon as you get me talking about stocks, it's just like,
Yeah,
I forget time.
Yeah, my passion is the same with it. For not gonna lie, I think I have a passion more so for roasting stocks, but
You like, all right, we're gonna close off with Meta.
Sure, let's chill.
We gotta close off with Meta.
So, TLDR, honestly, my mega bullishness of Meta is more so on the WhatsApp side of it. I know you like the actual Oculus metaverse business, B2B, all that, but like I'm more bullish on. Oh yeah, and Zebra's at a 7% free cash flow yield. Yeah, bro. Zebra's like, yeah, it's getting there. Zebra's interesting, bro. But yeah, with Meta, I do believe that WhatsApp will become the largest revenue driver for Meta. I think they will be the largest for Meta platform. Will be larger than Facebook and will be larger than Instagram. But
Whoa, I don't think it's gonna get that big, but I think it's gonna get huge.
I think it will. So
I know that we've had this discussion previously that so it dominates India.
Yep.
It's like basically part of life.
Yep.
And if you think India is going to be I do believe that. If you believe India is going to grow and grow and grow and grow, and like that's gonna be like the next excitement after this whole China BS kind of passes, because I don't think like China has the best future. I think India has even better future.
Yep.
in that case, like Meta's like very well positioned. And I told you about the integrations with Mercado Libre and the dominance that WhatsApp has in Latin America as well. And we're going to be seeing that basically already begin there. United States, fine. It doesn't dominate United States, but it doesn't really need to. You still have Instagram. You still have Facebook, which Facebook, I guess, yeah, it's dying, but you still have Instagram Reels. Instagram as a whole with the platform. People slept on the data that they showed with Instagram Reels. What happened with Instagram Reels? It was
Instagram Reels when it came, it was great. And when India banned TikTok, Instagram Reels exponentially exploded in India.
And we talked about this before it was going to happen. You made a video, but we talked about it a couple months ago.
No, we did. We did. And guess what's happening with the states? Yes. TikTok's probably gonna get banned. It was already the hints were already there. It was already banned by military uses, and the military families because of the data concerns and the security concerns. Similar situation is gonna happen, guys.
I am so excited.
People are like, TikTok's not gonna get banned. Why? Bro, they literally got everyone to lock up in their houses for 2 years. Banning TikTok is like the easiest thing the Western world can do. But no, bro, it's gonna be hard for them. But why? We want to see the booty shakes. No, we don't. We don't need to see that. No, it's all good,
bro.
Yeah.
Dude, that's great. Let's all do that.
Yeah.
And you do it in Canada. You do it in Canada. We'll do it down here. We'll just like
nah. Canada worships China for some reason.
But, because you still got the other guys in there, so.
Oh, Trudeau. No politics though. No politics.
No politics. But yeah, it's gonna be good, man. That's gonna be.
And that's another driver. And even if the TikTok ban didn't happen, Meta still would have been exceptional investment.
Yes, I agree.
But TikTok getting banned is just another step in that right direction, right? So I don't mind that extra push, that extra cherry on top. Don't mind it at all. And I always say in my videos too, just to trigger people when I talk about Meta, I'm like, if you support TikTok, you support communism. So it is what it is. But I always throw stuff like that. It gets people upset, but whatever.
Yeah, I think like Meta also was investing heavily into the infrastructure. People weren't really paying attention to that, and the numbers they were just like looking at, just like they're just burning money. And I think the narrative, for some reason, it got out there that people were starting to say that they were just spending all of it on the metaverse.
Yeah, they think like it was like 100%, even though it was like 18% of the capex was to the Oculus. Yeah. Most of it was to its family of apps, the infrastructure there, but whatever, bro.
Yeah, well, I think I'm biased because for me and now my exposure to Meta is like.
Oh, mine is ridiculous too. I think mine is like 14%, something like that. Mine is ridiculous. Parkland's right there. Right there with Constellation. So yeah, my allocation's pretty. Now it'll never hit 30. That's a little. That even that I'm like, that's a little much for an allocation. But
yeah, no. Right now it's Meta. Then it's the alternative investments, the two that put together, and then it goes Netflix and Google. But Google, I'm trying to get it to catch up to Netflix, but Netflix
just... Wait, hold up. It's Meta, and that's the two Wow, seriously, you macro degenerates, man. Jesus. But yeah, you're a nerd, so whatever.
Yeah, no, it's so far it's going great, but
both of them, So even the other one, Jesus.
All right. One of them is going nuts.
The other one was still but the other one is even more degenerate. Clowns, man.
No, the Meta position is doing well. The two under that are doing really well. Netflix just absolutely is destroying everything in my portfolio for this year. My call options actually got executed for Unum, so I lost some of my Unum. My Unum position should be smaller now. But that's unrelated. Yeah, Alphabet, Netflix, and then it kind of goes from there.
Look at McBuddha's comment on there. That's funny.
Please don't ban TikTok. That would force teenagers to interact more with the real world, and that would be very annoying for the rest of us. But less TikTok means more money for Meta. Oh yeah, no, Perry's also up there in size too. I think Perry's like a 6% allocation.
Yeah, I think that's like the second best Israeli company to stock. First one's always gonna be Mobileye, but
Yeah,
whatever.
Perry's at like the 6% allocation, and Intel's at like a 5-ish%. I
Trash.
think Fidelity got up to like a 5 something. Then after that's like, it starts to get progressively much smaller in terms of exposure from there. But yeah, no, it's interesting. All right. So that's wrapping up. We lasted about 2 hours, 2.5 hours. It's very
That's
good.
not bad. That's
It's
not too
very good.
shabby.
And for the time that we're streaming, this is actually a decent audience. 42 people right now at this time.
That's
That's
crazy.
good. Yeah. Because
What
when we
would
were in the normal time, we were higher.
yeah, what would be the normal time for these live streams going forward, you think?
Not 11. Like
No,
we'll try to shoot like, like 6 p.m.
yeah.
More
Yeah.
of a non-degenerate time. If we don't do it on Sundays, we'll do it on Saturday.
Oh yeah.
Kind of thing. So more of like the fun, relaxed stock talk live streams. Get through like what's happened that week or whatever.
Yeah, get through the markets. We'll be the better version of the millennial trash over there. Yeah, they're like, oh, look, a Bitcoin didn't go up and down. Oh, TTCF guys, I'm down again today.
And we'll hopefully have like maybe a new stock to talk about. At least one.
New stocks
every week.
Yeah,
Yeah, 5 new stocks to buy this week, and then next week 5 new stocks.
we could do a deep analysis of BlackBerry.
This is the 69 pillars.
Oh man.
The whole live stream, we're just going through the pillars. We end the live stream on the 69th pillar. Stock's not a buy. Should be half of what it is right now.
But isn't it the perfect time for the Chinese? Get your whatever.
I have like a couple from China. Some of them are in the Discord. But
wait, how does that
I don't know. When I conducted the interview for them to, because you get interviewed to get into the Discord server. They were in China.
I guess they have that black market stuff that they can do.
Yeah, I'm not gonna oust them.
Oh no! Don't. They'll be gone the next day. They'll be mysteriously vanished, like Jack Ma.
They're gonna work for Alibaba, but in a different way.
Oh yeah. Jack Ma mysteriously. Oh yeah, guys, I was in vacation. Yeah, totally.
Yeah. All right, guys. Thank you guys so much for watching, and we'll see you guys on the next one, guys. See ya.
Hey yo.